Okay, welcome back, guys. Welcome back. Now we've reached the roadmap series, and before I begin, I wanted you to really take a moment and just to realize how far you've come. Okay, it's not easy staying patient and consistent and reaching this, week after week after week. You have made it all the way this far to the parts where it's like, okay, I've studied all the puzzle pieces. Let's learn to put them together. Okay? Because without all this previous education you've had, this section and onwards is not going to make any sense. Okay? So we've learned a lot. A lot of it has to do with trend pullbacks. This is not a section to, master ranges. However, you probably have a brief idea based on the lessons I've shown you in the last couple of weeks. Right? So take a moment and pat yourself on the back, congratulate yourself of how far you've come. It's a long journey, and I'm going to tell you right now, many students don't make it this far. Even with all the research and energy I put in behind to make sure I grab all those goldfish memories and say, come on, as long as I can excite you, I'm sure I can get you this far. Even then, some people do drop every now and then. They lose interest and this and that. They can't hang in there. You have. You've made it this far. So I really want you to really look at that and celebrate. For those of you who are already in the MDR course, you know how important it is to celebrate. So don't just think everything's all about progress, progress, progress. Yes, it is. But celebrate your progresses. So this is a moment where you celebrate your milestone. You've come extremely far. Okay? Now, there's still a lot more aha moments to go. There's still a lot of stuff that we have to do. There's a lot more advanced stuff that we have to also cover. So in this whole stage, we're going to start with the planning phase. Okay? Now, the planning phase has a lot to do with who you are as a person. Okay. Normally, I would teach this, separately in a section called goals. This is something I'm going to create a course for some of you guys. If you guys are interested in doing something about goals, how do you create goals in your mind, and then you go and attack it. But I'm going to create one specifically for trading. Okay. So if that's something you guys might be interested, it will be available sometimes in the near future. But for now, I want to give you a brief overview because this is important for this lesson. It's required. Now, many of the students I come across and I talk to, we end up at a general question of why are you doing this? The why comes with 10 different answers. And the 5 from the 10, 5 are very, very common, right? Like it's the general stuff. I want to make more money. I have a better lifestyle. I want to provide for my family and kids. I want to do better for the world. I want to help people. These are the 5 most common things, right? And then there are some other 5 which I've heard is like the most unique ones. Like, oh, okay, I've never come across something like that. Like I want to, build a school that specifically targets, medical stuff. So I've heard all kinds of things, but generally they're very common. Now here's the thing. I want you to reflect on people who work. Maybe you're working right now. Maybe you own a business, and maybe you're in college. Okay, well, we have all kinds of people in here, right? So I want you to take a moment and realize when you do anything in your current life, whether it's you're working at a job or you have a business or you're in college, everything has a start, has a goal, and has an end. Now in trading, we don't have that. We have a start, but a goal and an end is not defined because it's up in the air. For example, why are you trading? And if the average person who comes to me says, well, I want to make more money. Well, what does that mean? How much more money? What do you have to do? You see, this whole part, people let go because they're like, well, does it matter? The more, the better, right? Problem is, when you're for example, when you're in college, you have a goal. I need to get that degree. It's going to take me approximately 4 years. There's a goal, there's a time frame, there's a target, and once you reach that goal, boom, project finished. In your work, your boss gives you something to do, there's a start, there's an end, project finished. Even if it's ongoing, for example, your job is to do all the emails that you get on every single day. It's everlasting because as long as you're working, that's going to be there every single day. But the goal is still there of cleaning up the inbox every single day, right? So you want to keep that in mind, that there must be a goal. Without that goal, the analogy I like to use is if I drop you in the middle of the ocean and you're swimming because you have to stay alive, so you're swimming, but you don't know which way, then what's the point? How do you know all the energy and effort that you're making, is it worth it or not? Now, if you see an island from far away, and even if you're a bad swimmer, even if you take longer to get to the island, at least you have a destination. You can see what you have to do, and you can swim backwards, forwards, scuba dive, whatever you have to do. However long you take, at least the end goal is clear and you know which direction you're going. That's a critical piece of information. So the planning phase is basically, let's say, I'm going to give you my example. When I started trading or going into the whole online sector, which is like, well, I want to do something with my computer, right? I don't want to go into an office because I saw my professor in the college doing this when he was trading options back in the day, and he got me into things. And he was like, well, trading, he was on his laptop trading, and I always saw my dad going to an office. My dad had a business and he used to go to the office every day. And I was curious, and I asked him, what are you doing? And he's like, well, I'm just working. And I always, this was after school, and I asked him, you don't have to go to an office? He's like, no, I'm just trading. These, you can see here, these are my charts. I just look at my charts, and as long as I have a laptop and an internet, and that's it. I thought that was brilliant. That caught my attention at a very young age. I was like 16 at that time. And that really struck me from inside. I was like, that's fantastic. I don't even have a laptop, but that sounds awesome. That's what I want to do. So it started from there, that curiosity, that whole energy, like, oh my God, he's talking about the internet, working on the internet, doesn't have to go anywhere. He doesn't report to anybody. All this stuff was like, wow, this is fantastic. So listening to all of this was like, okay, this is what I want to do. And when I started going into the online stuff, oh my God, home-based businesses, this, that, I've tried it all. And in this whole process, it was a period when my dad, gave me that sentence that I remember till today, which was, Naveen, everything requires hard work and time and dedication. Okay, you want to master something, it's going to require time. You can't be an all-rounded student because that's just going to be a waste of time. You're going to be average. You don't want to be average. You want to be number one, which means dedication at a certain thing. So I was like, okay, well, if I'm going to spend time dedicating myself, I like this online world. Well, what's the biggest thing on the internet? And that's what caught my attention to Forex. And I was like, well, I saw my professor doing something with charts. Oh, I'm going to do it too. And I started looking into that, and that's when it started catching my curiosity. And I was very analytical at a very young stage. It was something that I always enjoyed doing. I had then, going forward, I had my, teaching experience, which you guys all know how I came through that process. So it's like, oh yeah, I'm gonna do that too. I'm gonna trade, but I'm also gonna teach. But this was my whole journey. Was like, I'm gonna do this, and that's my goal. And my goal was to travel. Now that's my island. I want to travel. Okay. And then I defined it even deeper. Okay, how do I want to travel? Well, I don't want to travel locally. I would love to travel internationally. Okay, once I'm traveling internationally, I would prefer not to travel economy. I would prefer business. So I started making conditions, at least business class. I want to travel. I don't want to stay at, I don't want to travel and struggle, and I don't want to be a backpacker. I want to travel and go to nice places as well. I want someone to open the door for me. I want someone to bring my food to me. Like there were certain things which, of course, right now it sounds very, very materialistic, but at the same time, it was like, I wonder if I can do that. You know, Life has so many aspects to it. There is the spiritual, there's the material, there's the, love and everything. I was like, I want to experience it all. Whether it's good or bad or whatever it may be, looked down upon society, but in certain eyes, that's fine. But I wanted to experience it. I am not leaving life without my full experience, right? So when I accepted all that stuff and I was like, okay, I want to do this, I created a goal. So the goal was I need to travel. I made some organization of the goals, which is, okay, well, what's the objective? Okay, so setting the goals, right? So we've gone through the overview of what's required in this section. Now, as much as this section is like, oh, come on, where's the application part, Naveen? Aren't we going to do some charts? Yes, but you need to focus here. I would almost say this is more important than the charts. Okay, you have to trust me on that. Like, let me guide you through to do this professionally. Okay, so trust me on this. I want you to see if you can get out a piece of paper or your notepad or something like that, and I want you to start to list down of what's important to you in life. Okay, like, why is it critical for you to trade? That why, let's answer that. Okay, once you write that down, the next thing you want to put down is some sort of a time frame. Okay, and those time frames must be different types of time frames, which means one is going to be a long term, one is going to be a medium term, one is going to be a short term. An example would be like, okay, well, I want to turn revenue, let's say the why is, let's say I want to travel. So where do I want to travel? Okay, let's say I want to go to the Bahamas. Okay, I want to go to the Bahamas. I want to stay at the Atlantis. I want to get the nice room in there. So that's like $20,000 for a week. And it's going to cost me $1,000 of a flight ticket to get there. Okay, or $2,000 business class, let's say, $2,000 or $3,000. Okay, so I got $23,000 of a goal. And my goal is to do this in 6 months' time, for example. Okay, now that's a 6 months' time. Now you break it down to from $25,000. You break it down into little chunks of, okay, how much do I need to make at the three month line? How much do I need to make on a monthly line? How much do I need to make on a weekly line? And you need to gauge yourself based on that. That's your island. That's your island you're swimming towards. Okay, there needs to be an end goal. If there is no end goal, you're going to be swimming endlessly, and that's going to cause losses. As surprising as that may sound, in trading, if you swim endlessly, that's what's going to cause losses. Because when you make profit in a trade, how do you know if it's enough or not? How do you know if the next trade, after a profit, you should decrease your lot size tremendously because you're on the right track and you've met your goals already? You won't know. You're going to be like doing the opposite. Well, I made money, so I'm sure I can make it again, so let me increase the lot size. And then one loss gets hit and wipes it all away, and you're like, well, okay, let's keep going. No. Wrong planning, And this is what's the common mistake of most traders. Even after a little bit of education that comes in, they do some decent trades, and then they give it away in the bad trades, but they don't know how to control that. How do I control the good trades to be bigger than the bad trades? How do I know what is good, what is bad? I don't know that ahead of time. But if you do know your goals, you will have a stronger grip on it. You will know what actions to take automatically because your rules are going to be different from Bob's rules, are going to be different from Kelly's rules and my rules, right? So you need to customize this for yourself. So on that notepad, you've written down your why, you've written down your time frame for it. Okay, the multiple time frames, the long term, medium, short term. Okay, and then with that, now we do what we call the reverse engineering. Now, the reverse engineering is, if we continue to use that same example of $25,000 in 6 months, and we do reverse engineering, and we're like, okay, well, that's approximately what? Let me see if I can pull out a calculator here. Okay, let's just do this. Okay, so $25,000 divided by 6 months, that puts me at approximately $4,166 on a monthly scale. Okay, now I have to make sure how relevant is that to my account. Okay, to my account size. Keeping in mind, whatever my account size is, can I reach that number, or is that gunning for it too high? Let's say, what if my account is $1,000? Going for $4,000 with a $1,000 account in a single month can put you on edge. So your goals have to be relevant. Okay? The key to doing the right goal is to first be able to conquer them on a smaller scale. Then you get the habit of winning, and then you keep going. You keep going. Then you do not lose. You just have a habit of winning all the time, and you tweak and keep going. Okay? So let's say this number is okay for you, and you did figure out that, yeah, well, I can do that number because I have a $5,000 account that requires me to do like 80, 90, 95% of profits in a single month. So you're not being too unreasonable now. So now, when we're looking at this and we're like, okay, well, I got to make 4,000, let's say 4,200 on average for this account. And from a $5,000 account, I need to make 4,000. You have to start to then continue to reverse engineer. How much time do you have allocated to yourself? Are you a full-time trader? Are you a part-time trader? Do you have family time that you have to give? Do you have social time that you enjoy? Remember, trading is so universal, it doesn't mean you can shut off the rest of your life. It doesn't mean sacrifice everything and do this hardcore. Yes, if you do that, of course, it's going to speed up the process. However, it does not require you to shut doors to the outside world so you can just do this. Okay? You have to learn to be powerful at whatever you touch. Okay? And whatever you do. Okay? So, when you're looking at this number and you're like, okay, well, I'm allowed 3 hours a day. Okay? Comfortably. I'm allowed 3 hours a day, apart from my laundry, my wife or husband or my kids, and my work or my business. I'm allowed 3 hours a day where I can look at my charts. 3 hours a day you're allowed, which means you're looking at either trading a smaller time frame, which is 1 hour 15. Okay? I personally do not recommend that right at this stage because it's too fast. And when it means it's too fast, it also means you need to be on top of your game quicker. Okay? You need to process all the information faster. So that's later. You graduate to a lower time frame later. So you're looking at something like a 4-hour, 1-hour chart. Okay? A 4-hour, 1-hour chart. We're looking at approximately 1 to 2 trades per day. Which also means we're looking at approximately, around 40 trades in a month. So what you're going to do is you're going to divide this by 40 trades, and that's going to give you an approximate of $105 of revenue that you need to pull out. Now, $105 from a $5,000 account seems pretty okay, doesn't it? Like, how much is $105 from a $5,000 account? Okay, if you do that, 2%. It's 2% trading revenue. Now it's like, wait, 2% is okay. 2% risk per trade is okay. Now, when I say risk per trade is okay, you're trading approximately at the rate of $105 to make $105. We're not going for 2:1. We're going for 1:1. Okay? we're going to plan according to your allocated time without you having white hair or no hair or can't sleep at night because you're so stressed about the trade. Okay, we want to keep it as smooth as possible. I want you to leverage trading, not become a slave to it. Okay? Almost like it works for you rather than you work for it. That's the beauty of it. Okay, so once you have this planned out, and you do this number this way, and you're like, okay, well, I'm looking at approximately $100 per trade, which is 2%. Okay? So let me open up a bookmark here. Let's see. Let me just go to this page here. Okay, here's a position size calculator. Let me go in here. Okay, so then I'm coming into this position size calculator, and I'm saying, okay, my account has $5,000. I want to risk. I'm going to swap it with money. I want to risk only $100. Okay, you can find this position calculator. Either I'm going to put it into the description of below the video. You can ask Armo. Otherwise, you can simply just Google position size calculator on the internet or on your cell phone on the app stores on your iPhone or on the app store for the Google. Okay, and you'll find them there. There's tons of them out there. Okay, so you put down your risk, how much you're risking per trade. So you're risking approximately $100 in this case. You first need to understand to yourself, in my opinion, would be, is the $100 okay for you? Can you swallow a loss of 2 or 3 losses in a row of $100 without panicking? If not, you're going to have to work with a lower number. Okay? Because you have to accept that you're going to make a couple losses in a row. And then if that number bothers you, then this number is not going to work. We're going to have to work with a smaller number. Okay? The next thing is you're going to put down your average stop loss. So because you're trading on the 4 hour, 1 hour, we're looking at an average stop loss to be approximately 30 pips. Okay, so if I go down to calculate, I can see my position size here is 33,333 units. Or it's called 3.3 mini lots, basically. 3.3 many lots, right? Some of you guys might be on MT4, that might be 0.33. Okay, it depends on how detailed your broker will allow you to open the position. So when you do it that way, now you have a sense, now you have a sense of, well, how much money should I be risking? Okay, how much lot size am I going to be risking? So if your stop loss on a pair that's lower, let's say 20 pips, you're looking at approximately 50,000 units, okay, which is 5 mini lots. That starts to become your threshold. You should never catch yourself trading above this number. If you're trading above this number, you're not swimming towards the island, you're swimming away from it. Because you're taking too much risks, you're splashing too much in the water, it's going to attract sharks. Okay? Like, that's probably the best analogy I can come up with right now. But you don't want to be messing around with too much risk on your end. You want to conserve your energy, you want to conserve your breath, because you have to make it to that island. Every stroke counts. Every push counts. Don't take risks illogically. Do not take risks illogically. That's very critical. Okay? So now you have your threshold of, okay, 20 pips is that many units, 25 pip stop loss is that many units, 30 pip stop loss is that many units, and then 35 pip stop loss is that many. So you write these numbers down, you're like, okay, I'm ready, because I'm always going to be trading 4 hour, 1 hour, and I have a rough idea of how much unit size am I going to be doing. Of course, once you do different currency pairs, your unit size might change a bit. Okay? Once you have that into control, now you have your planning stage is starting to take place, and now you have a goal you have to work towards. If you take my advice on this, print it out. Print it out, keep it, or attach it to your monitor so it doesn't, obstruct the screen. But you have to look at that piece of paper every single day. Okay? Make it your desktop background if you want to. You have to look at it every day, but don't just look at it like, once you see a piece of paper in your screen, you look at it once, you look at it twice, and the third time, it's there, but you're not looking at it. You need to consciously look at it. Get the fire boiling inside your body like, I want that. I need to have that. Once you get the fire boiling inside, then any mistake that you make in trading, you're really going to get irritated and you want to fix it. That is the key to becoming a better trader, is because a loss or a mistake should bother you so much that you won't do it again. You can't brush it off like, it's okay, let me check the next trade. It's okay, let me check the next trade. You can't trade like that. You must stop and be like, WTF, what happened? You get irritated by it. So, take it slow, take it easy, create your island that you're going to swim towards, because you are in this ocean of Forex, and there are lots of sharks out there. Everything you do counts. Do not attract any attention. Do not go high lot sizes or anything in the sakes of getting to the island faster. Keep it steady, keep it consistent. And I know all of you guys can. For those of you who are watching this video and made it this far, you can do this because you made it this far patiently and consistently, so you have what it takes. So trust me on that. Keep it slow, keep it steady. And this, I'm telling you, is the most important piece of trading. The most important piece of trading. A goal. Without a goal, we're just headless chickens running around. Okay? I'll see you guys next week. Cheers.
Okay, welcome back. So hopefully last week was very powerful for you, or the last session, just to make sure you go through all your goals and make sure you know what you're doing. What is the reason for doing all this, right? The why, basically, right? So hope you got that down and you got that somewhere where you can use it to give you the motivation and the energy that you need to keep pushing, and not just push, but have breakthroughs, right? We don't want to do the same thing every day because that's not going to create progress. We want to do something better every day, right? So now this week, what we're doing is we're going to take it piece by piece to make sure. Now we're going to take a chunk of puzzle pieces and bring them in to put them together. Okay, we're not going to put all the puzzle pieces together, not yet. We're going to take chunks of them at a time. So we're going to start with correlation piece, right? So the first thing you want to do is, as you're looking at your charts, let's say you're a 4-hour 60 trader, right? You want to make sure that the wind is behind you. Okay, like imagine you're surfing, and if the wind is helping you, that's even better, right? But if you're going against the wind, you might still be able to do it. However, it's going to be a lot more difficult, right? So you want to make sure the wind is behind you or supporting you. Okay? Now, in this particular example, so let's say you're a 4-hour 60 trader, right? As a 4-hour 60 trader, you might be looking at this as, oh, well, recently we're in a downtrend. Let me change the mouse. We're in a downtrend. We're working with this. And in this downtrend, you're like, okay, well, I got seller's territory right here. That's the most recent break. And as it pulls back, I'm going to sell it. You see the pullback here on the 60 minutes, comes up, and then it just runs away. No sort of a slowdown for you to get in. Then it goes down again. It's like, okay, well, maybe that's the next breakthrough is right here. If it comes up slowly, I'll take a sell. It comes up very aggressively so far. But do you notice every step of the way where, look at the pullbacks here, look at the pullbacks here, and then look at the pullbacks here. Now there's something wrong with our seller. Even though we know it's seller's market, the seller is weakening. Okay, the seller is weakening, and we're losing the wind behind our back. We're losing the wind behind our back. We know our job is very strict of it's a downtrend, our job is to sell. But it is important to be aware of, is the big boys still supporting me for the sell side? Okay, this is very important. Now, when we look back at the 4 hours, one might be like, yeah, well, I can see it's clearly a range here. So we're approaching the bottom of the range, blah, blah, blah. Of course, that's why the sell is not going to be working so easily. But how can we confirm that? How do we know that for sure? So let me go up to the daily to look at the big boy's big boy. Okay, for the longest time, these guys have been in an uptrend. Okay, until recently, they don't have an uptrend anymore. They've got no higher high sequences going on, but they also have a no lower low sequences going on, followed by a big wick on the bottom from last time. So could it be that this thing is going to go up? Yes. However, you're a 4-hour 60 trader, which means could it be it's still a sell before it goes up? Right? Trades don't just go down and then suddenly go up and then suddenly go down and suddenly go up. Like, this is not pinball. It needs to go down, struggle, rotate, turn around. It's got to do stuff like that. It's got to have some sort of a logic to it, right? So let me go back to the 4 hours here. Sorry, 4 hours on this side. I'll put 60 on this side again. So we understand there is some sort of a wind problem here. 4 hours says it's a downtrend. However, the wind is showing that it tries to go upwards. Okay? That's one way to check it. Is your big boy with you? The other way to check is correlation supporting you? Now, overall, everything seems to be in an uptrend in all the euro pairs except Euro New Zealand. Okay? Apart from that, everything seems to be in an uptrend or rolling sideways. But if I go down to the 4 hours, everything seems to be recently in some sort of a downtrend, right? Okay, with the exception of euro pound. So you got the influence of other pairs telling you it's a down, it's a down, it's a down. But if the wind is saying it's a down in correlation, is this? Oh, sorry. Is this one better looking than this one? How about this one? I mean, talking about cells. Which ones look good? Yeah, that doesn't look like a cell anymore, does it? That doesn't look like a cell anymore, does it? It's so much aggression, buyers and sellers. We don't know who's in control. This one is sellers, but then the buyers are fighting. This one is sellers, and the buyers are just starting to fight. Okay? So we're starting to see a little difference in the markets. How about these? Sellers are still strong and buyers are hovering around. Sellers are still dominating and buyers are struggling still. Okay, so you want to make sure that the wind is always behind your back. So let's take a look into this a little bit deeper. Okay, so once you figure out the flow of the market and you see like, okay, I've checked the two types of winds, right? I've checked the type of wind that is going with my big boy. The other one is checking with the correlation. Now, the one with my big boy is saying things are starting to slow down, okay? But the one with the correlation is saying, well, everyone's saying it's a sell. So which one are you going to go with? Are you going to go with your immediate big boy, or are you going to go with the biggest boy, which is correlation? Okay, now, it can be intimidating that this thing is coming up in such a strong buy. Generally, statistically speaking, if you just look at one single chart, that means stand aside. Because it's so aggressive, the buyers, why would anyone sell into the face of that, right? However, having that said, correlation tells you this flow is still ongoing. Here's the thing. If you take a look at earlier examples here, look at that strong buy. Does that mean that could have been a V formation and the cells won't work anymore? Well, there's your next cell there. Look at this strong push up that says, oh, that's a probe. Well, that still has a cell after that. You see, just because it's at the bottom of the range doesn't mean it needs to just touch it and immediately need to take off to the top. Flip it to the other side. When this market comes all the way to the top here, and then it does this aggressive sell here, very aggressive sell, doesn't mean that it's still not for a buy, you know? So we can't be too quick to judge it that it's going to be a buy from here. We have to give it the benefit of the doubt. And the way we do things with our territories, right? Isn't this the territory? I would say that's seller's territory right there, and that's the guy who started it up there. Well, according to that, we're still in the sell zone. Okay, if we see it here on the 60, that's the guy who started it. So a buyer just came in very aggressively, and as we prepare to do our sells, the only thing we need to be watching out for once things roll over is, can I take it all the way down to here, or should I exit a little bit sooner? Okay, that's a different thing we need to worry about. But the game is still on for a sell. Overall, the trade might go for a buy, but that is not your trade as a 4-hour, 1 hour. Okay, that's not your trade as a 4-hour, 1 hour. So when you keep these things in mind, the next thing to keep in mind is, well, what about my risk? What about my risk? Is it better for me to do a sell on this one versus the other one that we saw that looked a little bit better? Let me go to the other one. For example, Euro CAD. Let's take a look at Euro CAD. Okay, when we see Euro CAD coming in like that, seller's territory, that's the guy who started it. Okay, and he's pulling up. Well, how come this one looks less intimidating when it has the same power of the buyers coming up? And it's coming down from the bottom of this piece too. Right? Because the sellers here look a little bit more aggressive here, a lot bigger, a lot more dominant. But the same issue happens. Whenever this thing starts to roll over, you get your V and all that stuff, and you prepare to sell, you can't take it all the way down here regardless. It's too risky. Right? It's too risky. So, keeping these things in mind, it's like for these buyers, take a look at this one here. Buyers are going up, buyers are going up. As it pulls back, hey, I'm going to buy it again. And as you buy it again, being in this uptrend, but looking at how aggressively it reacted, the buy probably won't make it to the recent high, but it does make an attempt. Okay? So for the guy who just is experiencing this pullback coming in to say, well, when can I buy this? He can't just immediately say, well, it's not a buy, it's a sell, because he has to sit through all of this before it's a sell, which means if it's timed wrong like that, because you're getting too much involved in different time frames, you're always going to get stuck. So you have to go with your wind. You have to go with your big boy. If they say it's still a buy, you buy. Okay? They say it's a sell, you sell. Okay? Do not overthrow your immediate manager or your immediate supervisor and saying, I'm going to go straight to the boss. The boss thinks in a whole different level. Okay? And the way he's playing for his sells is a lot later than you think. It won't be here, but it comes up much later. Okay? So if you let go of that, not only do you miss the buy opportunities, but you also have a loss trying to hit the sell. So then you're in a double loss, basically, right? So you want to keep these things in mind. Okay, let's take a look at another example.
Okay, so now I want you to think of one thing. Is the wind a risk control measurement or an opportunity finder? Okay, this is an important question to think about. And whatever answer you might choose right now, hold on to that answer, whether it's risk control or a opportunity finder, because what I'm about to show you now, you'll be able to answer that question automatically, and then you can validate if what you are thinking was correct or incorrect. Okay, so when we look at this, New Zealand across the board, this is on the daily chart, across the board, it's saying one thing: New Zealand is strong here, strong because it's inversed, strong here, inversed, strong here, also inversed. Now everything is high, all the way high, starting to pull back, high up in the sky, you know, down low, but Aussie New Zealand is in the pullback phase. Let's take a look at this one here, shall we? Aussie New Zealand. Okay, our job is to sell. Okay, now if we're saying our job is to sell, And we're still looking at this as, okay, well, assuming we're looking at this based on the daily 4 hours. Now, maybe I should put that daily on the left side, 4 hours on the right side. Okay. So we're looking at this as the markets are coming down. You're like, okay, give me some pullback and I'll sell it. But then it pulls back so aggressively. We're like, well, it's pulling back aggressively. I don't know if I can sell it. That's the bottom of the range or whatever that might be. So it's not going to go down. It's going to go up forever. Right? I get that. That's the reason why we had this strong reaction. I also get that. However, the flow of the market says New Zealand is strong. That's your biggest boy. You know, that's the big boss's direction. You know, the direction is going for a sell on this. Your immediate movement says the sell is threatened a little bit because it's bouncing a bit and it's bouncing aggressively. That's okay. It's something similar to here. It's like, oh yeah, there's no way this thing is for a sell. Look at the way it bounced. It's the bottom of a range. This thing's gonna go up like a rocket, and down it comes crashing down. It's the same thing. You need the wind to tell you which direction. Now, here's a dilemma though. According to the group here, everything is high up in the sky except Aussie New Zealand that's going through a pullback phase. Now, so the question is that an opportunity for us to hit the sell or look for a sell? Or is that something that's too high risk? Because now, although it's in the same direction, what if it's coming from the Aussie? What if it's actually not correlating? It just happens to be in the same direction. See, that's a very important thing. That's why we need to use the wind as a risk control measure, not as an opportunity finder. Okay, your job is to always find an opportunity based on low risk. That is the name of the game for any business, for any trading, for anything. You're looking for opportunities based on low risk. Okay? And then the high reward will automatically come in. They just come in automatically. That's the key. All right, now, when we look at this again, and we're seeing this as once it pulled back here, if we see this on the 4 hours now, it's pulling back, very aggressive, slows down a bit, pulls back, this time it starts to chop out, and then we get this boom, very strong V formation. Oh, it's got to be a sell right now. Pulls back, doesn't go in for a sell. These buyers were way too strong, or what we call the landmines, and they re-pushed it back up. He barely makes a higher high, comes right back in, jumps around in this area for a bit, which is supposed to be a support and resistance area once it breaks and makes a new high, but nothing happens there. And he falls further lower. Well, okay. And then it reacts off of here, leaves a big tail. Now what we're in is in a money spot. Because these guys who are looking at this as a probe are looking at it as, well, that's got to be a sell. While in the other hand, these guys are looking at this as a buy because, well, that's just a pullback. Look at that exhaustion candle with a big tail on the bottom. It must be a buy. Now, between this war, there's only one person who can pull you out, is the big boss, who's like, I've seen through enough of these nonsense fights. Here's some extra money, go for the sell. Okay? They're the only ones who can pull you out of this mess. Okay? That's why it's important to know your wins a bit ahead of time. Once you know your wind, you have to trust the wind. Every now and then you're going to be wrong, and that's okay. It's like business expense, right? Or marketing expense, or whatever you want to call it. But for the most of the times, the big boy will take care of you. They will take care of you. Imagine trying to sell in the face of that. Like, that's scary. Isn't that scary? But then they still pull you through. Imagine selling in the face of that, you know. It's scary, but they pull you through. Okay, so in this particular case, buyers go up a couple times, come down, landmine pushes it back up slowly, and then aggressively, it's like, sells are not here yet. Sellers come back, they fight it, and as they fight it, nothing happens. They come lower, they're trying to fight it again, and now we're like, money spot. Now we're into this fight where let's see Here's another mini landmine here, where the big buyer came from. He bounced off of here, left a green exhaustion candle, but then the next candle was red and in the same price. It didn't do anything. Okay. And then the market starts crashing down, crashing down, crashing down, crashing down, and now he's in this area of seller's territory again. Now, can we get this clue from the group that we were looking at? Well, if everyone is massively saying New Zealand is strong, is eventually Aussie gonna also let go and let New Zealand be strong? Why was Aussie the only one that was causing this issue? Let's take a quick peek at Aussie group. Okay, I know this is sounding a little bit hard because there's so many steps required, but this steps is just going to become automatic. It's not even necessary all the time. It's just something you always want to do to stay on top of things. Okay, Aussie here, strong, 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 neutral I would say, because it's in a downtrend, but strong recently. Okay, this one is trying to break new lows, so strong there, strong there. So Aussie is strong and New Zealand is strong. That's why they're fighting. Now that they're fighting, how do I know Aussie is going to let go of the gas and let New Zealand take over? Okay, if Aussie and New Zealand are both strong, all the bells and whistles would just say, wow, you know, sorry, that's the horrible siren, but you know what I mean. Like, it's already telling you don't touch this trade. But if you are looking to touch this trade, you can plan it. Now, how do you plan these kind of things? You watch out for your landmines or areas of resistance where Aussie might let go of the ball. Okay, across the board, where would Aussie let go of the ball? It is that time when New Zealand can actually play his game. Okay? Oops, sorry. Okay. Okay. So, it doesn't look like Aussie is going to let go of a ball at a nearest SNR area or something like that from the daily quite yet. So I still do believe that going for a sell on Aussie New Zealand might not be worth it. What looked like an opportunity, what was a nice pullback, because we were able to look at the entire New Zealand group and be like, it looks nice, it's a pullback, but how come no one else is doing it? That is like a risk radar. It's like a clue that the world is giving you saying, don't touch it. And now that we're here in the Aussie, we can see why. Aussie is strong also. Now, if you've already done your correlation, you already know not to touch this. However, in case you didn't do it and you just did New Zealand, you can also pick up the clues from the wind that way. So you can do it naturally as well, or you can do it the way of being prepared and getting organized ahead of your trade. That's also a way to do it. Now, whichever way you choose to do it, it tells you to stay away from this. So if the answer to the question in the beginning is the wind is a risk control measure that eventually turns into an opportunity automatically. Okay? So if the risk control says you're free to go, well, it becomes an opportunity. Okay, but we look at it with the eyes of, I don't know if I can do this. I don't know if I'm allowed to do this. Things don't look right. Okay, so I want you to keep this in mind. We're going to go in a little bit deeper next week. Take all this information that you have. Look at all your current trades that you're doing. See if you have the wind behind you. Look at some of the recent trades that you have done and find out, you know, when you were wrong or stuff like that. Find out, was it the wind that caused you a problem? Was it because you were going against the wind? Was it because your group wasn't with you? Or was it simply you were just looking at your big boy, but you had no idea that the correlation is completely against you? Keep these things in mind. Do a little bit of research this week, and then we'll take it from there next week, and we'll go a little bit more deeper. All right? Cheers. I'll see you guys in a week. All right. Welcome back. So in this week, what we're going to be talking about is power. Okay? Now, the power of the movement. This is one of my favorite things to teach because this thing actually gives a lot of aha moments, and it goes hand in hand with the rubber band man. You guys might have seen a little bit of preview on one of the webinars I do publicly, but we're going to go more into detail here, right? Because we're in the course. So now, what is power and why is that important, right? We already know, we have the wind behind our back, saying that that's the ultimate power. So for in this particular case, let's say we're looking at pound yen on the 4-hour chart on the left, yeah? And we can clearly see the power is for the sellers, and all we need is, we need a pullback from the buyers so that we can sell, right? Now, as we're looking at the pullback from the buyers to come in, we have multiple conditions, okay? I want you to always picture this mentally when you see a pullback coming in. So let's say in this sell trade, your pullback is like buyers, right? So this is your buyers. And then when your big boy comes back in, which is the V formation, right? That's the V formation is basically your big boy stepping back in, which is the sellers, okay? Think of it like this is their power. When you have a situation where you still have power, even though your V formation came in, but your buyer never left the building, those are the most dangerous ones. You have to be careful of those. For example, if we take a look at this and say, well, you see this move up here? He went up, oh look, he's struggling. He went up in a few pushes, and after he went up in a few pushes, he came down, he gapped all the way down right here, making a V formation. That's an example where, look at how strong this buyer is. Look at how strong this seller is. You put these two together, you still have equilibrium. Now that's dangerous because you don't know what's going to happen next. I don't know either. You see, when we have equal power like that, the only thing that we do know is because we're not in the big boy's office, right? We don't know what information that they have access to. All we do know is the pullback is still strong. Okay? So although it might look like they're struggling and it's dying out because after that he's done a full rest, and we can even argue that, oh well, but then that could be a probe and that's no higher high. Yes, but the strength it went up in is quite scary. Not to mention all the activations from here is also quite strong. So look at the way it comes down afterwards. Chop, 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 barely makes it down here and reactivates. Reactivates, goes up strong, slows down. Goes up again, barely makes a higher high, and then it comes down. Now when you look at this one here, it's like, oh well, that's like a lopsided V formation. Good. But then the buyer here is not as strong as it used to be. And the seller here, it's starting to come in, but as he comes in, he bounces off the strong buyers again, and yet they reattempt. Now the test phase is important for us, right? Like, okay, look, I guess he's dying out now, right? In this phase. Let's take a look at this phase in on the 60, the test phase. Where is it? Right here. Now, notice this piece. Doesn't it look equal, the structure-wise? Like, of course it's lopsided, but doesn't it look like, oh, look at the size of the candles. They almost look very equal. 3 moves up, 3 moves down, and the size of the candles, yeah, pretty fairly decent. But when you look at this on the 60, it's like, whoa, that was the move up. Chop, chop, chop. And these are the moves down. Aggressive. Right? We can see the fine details. Like it's like microscopic. It's so much more sellers than buyers. We like stuff like that. Okay? That's the moment when we can say the buyer power diminished to something like that, and the seller power is all-time high. And that's when you can say the chances of my sell working now have a higher chance of going further. Now, let me show you for example. Okay, if you just focus on the 60, right? And when you see that, okay, I can see a V formation here. Okay, the buyers are going up, they slow down, buyers are going up, slow down, chop, 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 boom, V formation. Now, the V formation is fighting a nasty up move. Nasty, choppy, grindy up move, right? Which means buyers are slowing down. That V formation that comes in aggressively, followed by a successful test that's slow, tells you that when you hit the sell, you have a chance of going far. However, if you have your move grindy upwards and you have your V formation grindy downwards, look how long it takes before the drop happens. He's also chop, 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 and they're like, well, equilibrium battle almost. Okay? They're just battling it out and finding, well, let's see what happens in this area where one buyer was aggressive. So they're fighting, 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 clear. Okay, now let's go. Okay, and we'll get more into that when we do landmines and stuff like that. But for now, we're going to do several more examples of this, and then we're going to go into it. I'm going to take you in the next video, and we're going to talk about this section right here. Okay, so we're in this example now. We're on the pound yen, and I was telling you that I was going to show you this piece right here as it pulls back. Now, of course, the wind says sell, dominant, strong move down, and we're getting some kind of a pullback. That we're saying that, okay, this pullback needs to slow down, roll over, turn around so we can hit the sell. Now, the pullback that's coming in, aggressive, right? Very, very aggressive. Now, if you want to see the fine details of this, we can see it here on the 60. Sharp, aggressive move, and the aggression picks up here. Even though it looks all three solid green bars on the 4 hours, but on the 60, you can see it goes from chop buyers, not so choppy, but still aggressive, to suddenly very aggressive. Okay, that's something to remember. That's something to remember. Okay, followed by a pullback, just as aggressive, and some might even count this as a separation of a leg, and that they might be like, well, what if that's a V formation? What if that's a V formation? And the answer we all know is not. That's not a V formation, right? It's still buyer's market. All we had was a 50% pullback. Okay, right here, move up, 50% pullback. Here comes the next move up. So the next move up gets all the way up to here. Starts from here, gets all the way up to there. Now, how does that move go? Slow, aggressive, slow, aggressive, and aggressive down as well. But we don't like aggressive up and aggressive down. So right now, we're at the situation where the lines are like this. Yeah, just picture these in your head. It's like shark gills, you know? Like so just picture these in your head. You got both parties fighting it. So not yet. Not to mention, all of this up here is happening at the mercy of this guy taking the price so high. Then once it comes down, let me remove this. Once it comes down, he gets down to this support. Okay, he gets down to that support. Comes down here, aggressive buy again. Followed by very aggressive sell, which means the chart still looks like this, all right? The shark gills or the little circles, half circles, they still look like that. Followed by the next move up. Okay, this is buyer's area. You don't do anything. And each time, price is also inching its way down. However, just because it's inching its way down doesn't mean hit the ball. You know, just hit it for a sell. No. Patience. We do not trust this bottom area here. We must see what it means. Followed by green aggressive guy again. Ah, come on, buddy. Followed by another one. But this time, these few candles that activate from this buyer's area leave wicks and everything. Followed by a strong down move. Like, that's gotta be my V formation. Because my buyers just disappeared and I had my V formation. That's the real deal right there. Now the test. Here it comes up. It's aggressive. We don't like that. Comes down, bounces off that guy. Slower. Perfect. And then the sell starts to go. That's when, with the power cleaned up, the trade can now travel. Now, you might be thinking, well, what about when you have situations like this? Well, those are the ones that get away. Stop trying to catch those. Okay? When you do all these things in mind, what's going to happen is two things are going to happen. You're going to have a peace of mind Okay, that's one thing, probably one of the most important things. You don't want to be going crazy. So you want to have peace of mind, you want to have control over your emotions, and you want to keep it simple as possible. Why you want to make it complicated? If you know these trades do not work for you because they're so aggressive, you don't know where you put your stop losses, but something like this, you can even put your stop losses like this. And saying, I'm just going for my sell. It's a lopsided V formation. I'm going to hit it from here. Stop loss is up there. Now we got a risk reward, something like that. That's your stop. Okay, and you're going down to the next landmine, which is right there, right? Okay, because this bottom landmine is cleared. We've been firing at it for quite some time, and once it's cleared, it's like, okay, we're going down to the next landmine, which is all the way down here where the big buyer shot it up against, like, oh, what if they do it again? Or if you want to play it safe, take it up to there. Okay, so down here. Now look at that risk reward, much healthier, isn't it? What if you entered much earlier, much earlier? What if our entry was here? Because I believe that was the V formation, so that must be my sell. Well, it's a lopsided V formation, so my stop loss is going to be a little bit healthier. Does that work? No. So you got to be careful with these things. Power, reading the power is important. Yes, you want to read the rubber band man, but never forget in the rubber band man how he's running is very critical. Okay? If his rest is stronger than his run, not the distance, but the power of it, we have something decent that we can work with. Let me show you some examples of what does it look like in terms of the power. The distance might be the same, but the power may not be. I'm going to show you some of that stuff. Okay, so we're here on the Aussie CAD, right? And I'm going to show you where a lot of the mistakes happen sometimes, because people might assume that, okay, well, it's a buyer's market, right? Obviously, clearly we see the 240s in a buyer's market. Of course, we can get into all that stuff later, that, yeah, it's overextended, it's out in the open, everyone can see it. Yeah, I get that. Right now, we're just going to talk about the power, right? Piece by piece, right? So calm down. So as we see at this stage, we're like, well, okay, buyers are in control, give me some pullback and I'll buy it. Now, the typical mind when it goes into pullback phase is like, well, I can see a pullback coming in, resting, coming in again. That's got to be my V formation, right? That's my V formation right there. So on a test of things, I'll buy it. Well, the buy didn't work. He came back down again. Okay, I'm going to buy it again, or I'm going to stand by, this and that. Then the whole focus shifts on, is it now? Is it now? Is it now? Right? Everything just keeps going, is it now? Is it now? Is it now? However, without identifying, we weren't supposed to be in the trade in the first place. So let's discuss that. Okay, there are several things wrong with it. Obviously, yes, it is overextended. It's out in the open. The public can see it. We needed to pull back much deeper. We get that. However, notice the distance it traveled to do the V formation. That looks equal, doesn't it? It's like down and up. But the distance does not matter as much as the detail matters. Look at the way he came down. Look at the way he went up. Okay, 3 candles down, 6 candles up. This is a clue for you. You're looking at the same thing, but you're looking at it with more data. This is important because this tells us that the V formation represents our big boy. But why in the world is our big boy taking so long and struggling? What is it about that down part of the V that the up part cannot do so easily? That means my seller is not done yet. Right? He's not done yet. He's still got power. Okay? So after that, both the buyers and sellers start fighting. Okay? Buyers can't take it up, sellers can't take it down. They start fighting. Eventually, buyers give in and sellers take it down. Okay? So yeah. So these parts are the most critical parts to be like, well, that's not your V formation. You have to monitor the power. You have to monitor the power. Okay, another situation here. That looks like a V. Not the best looking one. Can say it's okay, 95% V formation. Fair enough, but it looks like a V, doesn't it? Well, why doesn't that one, go up instantly after it does a test or anything? Why does the test come down like a lower low? Because it's not done yet. The only place to catch a trade from something like this is over here. You can't take a trade in any of these spots. Okay? So you have to understand these things, that it makes a big difference of how you're watching all this. Okay, let me see if I can find you. We'll do one more example of this because this is critical. Okay, let me go into, let's say, EuroCAD, and let's have a look here. Okay, let's take a look at a pullback that we like to work with. Here we are. Let's take a look at this one. Let me open it up, and I'll maximize it a little bit more so you guys can see. Okay, so we're looking at this. We got a strong down move. Okay, obviously downward market, and then in this phase we're starting to get a pullback. Now pullback coming up, coming down, coming up. V formation. No, not a V formation. That's not good enough. Okay, so this is gonna help a lot of you guys out who are taking false V formation and just looking for V everywhere. No, it's not just about the V. It's about, is the V telling you what it's supposed to tell you? That your big boy is back after your buyer has died. Okay, or after your pullback has died. It's not telling us that. It's telling us it's trying, but the buyer hasn't died yet. So that's not gonna work. So instead of a test going like this and dropping, this thing just takes off to the north. Okay, buyers still very strong, and then boom. Okay, that's gotta be my lopsided V formation. No, buyer didn't stop yet. Look at that power. See, so it's these things that should make you start going, huh, well then, when is it? I don't get it. When is it? Well, you have to wait. As long as it's below this guy, the game is still on. Okay, the game is still on. Then the buyers go up. Very powerful. We don't like that. Rests a bit. Goes up again. Rests a bit. Goes up again. Chop, 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 chop. Boom. 2 candles straight down. Okay, first one a bit choppy. Next one straight down. Like, could that be it? Because the up move here was struggling. The down move, even though it's similar distance, it's not struggling at all. It seems to be very healthy. So that's when you start imagining, I think the power just slowed down and the big boys just stepped in. Okay? And then you can give yourself as many stars as you want to the left and to your right to just determine, like, well, how good do you feel about this? Is it good enough to put a lot of money on this trade? Or is it risky? Because it's all about risk. If it's not good enough and the risk is too high, be careful. It's better not to take the trade. So once you see this, you're like, okay, I think my seller is stronger than the buyer. I have an idea that the buyers are slowing down and dying, and I seem to have support from my supply area here, or my big boy, which says it's okay, you're gonna go for a sell. So we start making up all these excuses to justify our behavior, to say I think the sell is ready. At that stage, there is only one thing that can save you. Let me see the test. Test comes up. How does it come up? Slow or aggressive? Aggressive, yes. Comes up aggressive, gets up to here, leaves a wick on top. We're like, okay, that's a good sign. But we can't sell yet because there's this guy sitting right there. Comes down, fights it, boom, hits it up again. Very aggressive. We're like, that's not good. That's not good. Okay? Because now this could be a V formation to go to the north, to go to the upside. What if that was my seller struggling on the way down? That's just a V formation to do this. Right? So we're now in a dilemma slash money spot. We're stuck in this area. For some people, it's a sell, but for some people, it's a buy. Okay? Okay, so that means we're approaching at least one thing for sure. We're approaching the blast zone. Okay, that thing is given. We're approaching the blast zone. We just don't know which way because we don't know who's letting go of the ball. Okay? If you do believe that around this area your buyer had quit, the wind is behind you, the big boy says sell, you stack up all these things in your favor, but one thing sticks out and says, but what about this guy? I don't like the way he looks from here. What about the fact that the pullback was 90% deep? If that's the down move and that pullback is 90% deep, these are reasons of problematic reasons, which means if I do the sell, I have to get out somewhere here. I gotta exit my trade somewhere there because I don't know if it can go any further. Somewhere around that area I gotta exit. So obviously I can't hit a sell too low because then my risk reward is gonna be all out of whack. I need to get an entry a little bit higher, but I don't want to just hit it for the sake of hitting it. I want to know my trade can survive. So I see this movement that went up really hard, but then my seller came down very hard too. 2 moves up, 1 candle down. I don't trust it. But no higher high twice. Let's have a look at this on the 15. Same distance. I hope I can find it. Right, I didn't scroll too far back. It should be here somewhere. There we go. Okay. That distance that he traveled, in that distance, he went up twice. In two swings he went up, and then the move down just came collapsing down. We're back at the area where the strong buyers were, and then we have this chop, 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 boom. Okay, whether we get in on the chop areas, that is up to you. Whether you get in after that big dramatic move down, and then now you say, okay, now I believe that my buy is officially done and I can hit my sell. Then you have to think about risk reward. Is it worth it? Because if you're supposed to exit in this purple area, let me go back to the 1 hour. Okay, if we're supposed to exit in the purple area and you're entering your trade somewhere here, that can be problematic. Okay, but you did do the research up until this point to clear everything. We'll discuss that in next week for landmines. But I hope this is all making sense to you, right? If it's not making sense, you can leave a comment below and have Armo and Lucille and everyone assist you with this. However, if it does make sense to you, let me know by saying it makes sense, because the power is very, very critical. Okay, it's very, very critical. Everyone keeps looking at the shape, and the shape is simply always going to look like, oh, well, that's got to be a V. But we have to understand, what if this thing did like 50 candles and this thing did like 2 candles on the way down? That makes a big difference. And if it's vice versa, that's a problem. So if it's the other way around, where it's 2 candles to go up and then 10 candles to come down, that's not a V. That's just saying this thing's gonna go back up. Okay? So to weigh these problems, just keep this image in your mind all the time. How much power is the pullback? How much power is your V formation or your big boy coming back? Okay? I'll see you guys next week. Alright guys, welcome back. So in this week, what we're going to be talking about is the pinball effects prior to a trade. Okay, so you guys already heard about the test, right? I gave you a little quick glance at what a test is after your V formation. But if you notice, every time, whenever a test happens, you have this little, like a pinball effect or a range effect that plays in motion after your V formation, right? So what we're going to do is we're going to be discussing that a little bit to make sure you're aware of the pinball effect and how long it could possibly take in that pinball effect before the trade can take off. So a little bit similar to the timing phase, but putting this together with the entire story. Okay, so this is why it's in the roadmap part here. So let's take a look at this particular example. Okay, let me change this to a mouse. And overall, this was a downtrend coming in from the 4 hours, right? And we're now onto the 60 minutes, our trading time frame. So let's assuming we are trading 4 hours 60. Now on the 60 minutes, we have a pullback coming in again. Okay, pullback going up again, because here it looks like there's some kind of a V formation, right? It's like here's a pullback, comes down, goes up again, no higher high. That's got to be my V formation. But this V formation does not perform because the movement is just so powerful on the way up. So the up move is still pending. Okay? So we're still watching this closely and seeing, well, if it's still pending, and that's how the first move up looks like. Okay? That's how the second move up looks like. Like, wow, they got a lot of power. Look at that third move. Oh, that's a lot of power as well. Followed by the fourth move, which barely made a higher high, chopped around quite a bit, but at the same time slammed down with the hard V formation, like that. Okay? So when we see this, we're like, oh, great. Looks like we got a real V formation, because we saw in the previous lesson that we have a choppy up move, an aggressive down move for our V. That's a good sign, because it means the uptrend is slowly dying, not just from this part of the V, but also putting all this information together that the up move got stronger and stronger, but here it became weaker and died. So now we're in this stage of overall move is down. We just had a V formation, and now we've approached this area of the test. Now, if you will always notice, the test ends up being some kind of a range. Okay? Almost like you can call it the quiet before the storm. Okay? However, there are times when the tests are a bit volatile like this. It looks volatile on the 15, but when you look at it on the 60, it's like, it's not going anywhere, right? It's just choppy. It's not going anywhere. So this is what I mean by, around this area, you're going to have a pinball effect. The markets are just going to bounce, 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 bounce. And here you have a lot to do with, remembering your landmines that you had. Why will it bounce? Why should it not bounce? And stuff like that. So let's get into that little nitty-gritty bit. Okay, so in this particular example, once the V formation happens, you're like, great, give me a test, and then I'll take it from there. Before you can even think about tests, we must first try to understand, wait, what kind of V formation is this? Is this a lopsided V formation? Did it make a lower low? Or is it an equal V formation? There's a dilemma, because it looks like it went lower, but then it snapped back. The up move is struggling, but the down move is strong. We have a situation here because the up move is struggling, the down move is very strong, but then there is still a variation of, if the down move is very strong, what is this? Why is it snapping back? Okay, this is a first sign of you might still be okay for a green light to go, but you're getting indications of maybe the markets are not going to move as quickly as you can expect. Okay, it will take some time. So if we're going to count this as a equilibrium, as a normal V formation, not a lopsided V formation, we can expect the test to come up quite high, if not even make a spike up. Okay, the spike up one we're going to be discussing next week, where we're going to go into how can you prepare for spikes ahead of time without even preparing for it while you're in the trade, but you can prepare for it ahead of time. So we'll look into stuff like that. So finally, we're looking at this area and we're like, okay, my V formations happened. We're getting a rejection from the bottom here. They're getting a strong reaction here. So then we start moving over to our 15 minutes, because we're like, we've done all the read on the 60. We've done everything we have to do. We spent 95% of our time here. Now we have to prepare for the final stages, which is the test. Okay, we can simply just do one of two things. Enter, stop loss up here, and then play the game for going for 1R. Okay, can keep it simple like that, and exit at your recent low. Okay, there's an exit right there. All right, now there you might think this might be the exit down here, but don't forget there are some really aggressive moves activating from this area. Not to mention, this whole area on a higher time frame could look like just a probe. So you have to keep that in mind, as this might be your first stop. Okay, he might be able to break through and possibly make you more money, but we don't count on the possibility. We have to go for this area and say, you know what, that's good enough for me, because I want to be able to repeat. Not make $1 million in one trade and then assume I'm done for life. That never happens, because you're not done for life. You're going to be back there the next day trying for the larger amount, and after a hit, you'll give it all back. So what's the point? Okay? So keep this in mind. This used to be a problem for me quite a bit also, going for the big numbers, and it took a little bit of psychological training to get rid of that. Okay, so when we're looking at this, let me remove all this. So now that we're done with the 60 and we move down to the 15 minutes, okay? Because we're deciding not to do that option 1 where we just enter a big stop loss and go for it, where we want to time it. We want to time it. So we're like, okay, V formation is done here, right? That's our V formation that we saw on the 60. Now our job is to look for, you know, how far can the test can come? Well, the test can come as high as this if it wants to, because it's a 100% equal V formation. It's not lopsided. The next thing is, look at these strong buyers, which means there's a landmine here. There's a problematic area. Markets push up very aggressively, come down a bit aggressive, but push up even more aggressively. Okay, that's a sign for us to saying, although we know this might have been the last buyer, okay, if you remember that's from a previous lesson, hey, look for that last buyer. That could be very precision entries for you to get in. We're not going to bank on that right now. Although that might look like that last buyer or a nice, you know, supply area, it is quite dangerous because we don't know if the trade is going to perform yet. Once the market reacts from this area and comes down just as aggressive, we're like, good. Our sellers now are fighting. Now the pinball is now officially active. Okay, landmine on top, landmine on bottom. All right, next time it comes down, okay, comes down aggressive, pulls back a bit, comes down very aggressive, bounces off the landmine yet once again, and the landmine pushes the trade right back up. Kaboom. As he's working its way up, he builds up his case, gets up to here, gets smacked down again from this landmine, and works its way down again. But choppy, which means we still don't know if we can activate this trade until we reach an area that we're clearing this area, and we're starting to poke below and mess around with this area. As we're messing around in this area, look at the reactions to the upside. No more than that. No more than that, and that tells you you can now activate your trade in this zone and keep your stop losses. You know, you can keep it strict in this area above here if you'd like, or you can just play it safe and just keep it all the way up there. Okay? So you have these situations where you have to stand by and play the landmine game in this final stage. So this was just one of the examples. Let's go into another example. So, you know, we'll look at different types, because this is an aggressive final stage where it's just volatile. There are times when they're very quiet. So let's take a look at that, okay? Next trade. Okay. In this one, I'm going to show you a wonderful example on pound yen. This is a 4-hour 60. But before I even get into it, I'm gonna point out a very big problem. And if I can solve this for you, because if you're having this problem, I want you to let me know in the comments below that yeah, you are experiencing a similar problem when it comes to, wait, what am I supposed to look at? Is it this time frame? Is it that time frame? I'm getting a little bit lost in this little cycle here. And now it's not like the lost that you used to be like early in the MPA. This is now lost because there's too much knowledge in your brain, right? So that is also another dilemma. There's one dilemma when you don't know anything, but then there's another dilemma when you know a little bit too much. right? So that causes a conflict of interest. It's like, wait, am I supposed to buy this? Am I supposed to sell it? So let's discuss that a little bit first. So in this particular case, this is a perfect example that gives you that dilemma. You're looking at this as, let's say you're doing a 4-hour 60 trade, right? So according to the 4 hours, you're like, oh, well, this is buyer's territory because we're just looking at this area here like that. Like buyer's territory, pullback, we got to do a buy. But while you're doing that, you cannot help but look at this and be like, yeah, but that's a seller's territory. Okay? So I don't know if that buy is going to work. This is a normal logical way of thinking, and there's nothing wrong with that thinking. However, the problem where you come with this is the analysis goes incorrect. I'm going to explain that to you. Okay, so let's first do the traditional way of doing it, which is the normal way of doing it. You're looking at this as a buyer's market, and you can care less what all of this stuff did. And you're like, my job says buy, we buy, end of story. Why? Because not only do we have a first aggressive buyer, my second aggressive buyer is even much more aggressive. Right? So we're like, game on. It's still a buy. Okay? Especially if the pullback is struggling, then why not? Okay? So once we have this information in mind, our job on the 4-hour is done. We now move towards the 60. Okay, territory is done. 60 is our time frame where we spend most of our time now. And now we're going to be looking at this pullback phase coming in. Okay, so here starts the pullback. Very aggressive. Boom, drops down. Okay, pulls back a bit. Boom, drops down. Tries to make a lower low. And then instantly goes right back up. Okay, not just back up equally, but tries to go even higher. Okay, and just a little rejection, not so big this time. So that's like, okay, well, could that be my V formation? Yeah, it's possible, but I'm a little bit afraid of how strong this down move came. What if that's going to cause me a problem? So I'm aware of, well, they might have some landmines working with them, which is somewhere here there might be a landmine, and then somewhere here there's a landmine, which is seller's territory and a normal SNR seller's territory. Two areas with a possible landmine. So we have to allow them to do their thing, which means if we do accept this as a V formation, we now work on the pinball area, the test area, to make sure we understand, well, what is happening. So we did all the research up until this point. We see the first move coming in aggressively. We don't like that. Pullback is even shallow. Next move coming down semi-aggressively. But then it goes up just as aggressive. But it's not even equal. It's lopsided. We're like, let's see what this really means. And we look down now on the 15 because we've done 95% of the work here. Now we're on the third time frame to say, well, show me what you got in the last minute area. Where's my mouse cursor? Where'd it go? Sorry, let me move back a little bit. Let me find my, there it is. Okay, here we are. Okay, you got your V formation, and then you got the same thing again with the landmine thing. Aggressive down move coming in. It looks aggressive on the 15, not so much on the 60. Remember, 15 is not our trading time frame. We're only here to watch the test, to watch the final pinball that always acts like it's in some kind of a range, right? So anytime you see a range, you can always look at it like a range is basically the final pinball stage in something of a higher picture. So whenever you see a range, you're like, maybe this means something on a higher time frame. Okay, so you can also get an understanding of which way the range is possibly going to break out, but that's more advanced topics. But you have an idea. I've just pointed you out in the right direction, and we can discuss this on another time. But so we see this range building up, and we're like, whoa, landmine there pushes the market down, aggressive, aggressive, aggressive. Landmine here, buyers push up also aggressive, almost equal aggressiveness, right? The sell looks multiple candles, buy look multiple candles. Good. We're not getting through this guy anytime soon. He pushes it back down. We got a lot more candles coming in. Slows down. Last few candles slows down, wicks and everything, followed by strong green. It's like, okay. Next move down, strong green. Okay. What about this landmine? Red bar, big tail on the bottom, recovers. So someone did push it down, but it recovered. Next green bar, fully green. Okay, closes up here. You're now in the clear, telling you any trades you now activate, you're away from all these landmine headaches. You should be clear from them because they're not performing as well. Okay, so as you do your buys from here, taking it all the way up to your recent next support equals resistance, or your next landmine, which is right there as your exit, okay, you have a smooth ride all the way to the top with a possibility to put your stop loss just below here instead of the typical put your stop loss below, just below your V formation, because it's a lopsided and this much should be enough. Okay, that's the simplistic way. When you're trading part-time, you're trading full-time, you're able to put your stops there. And this one still ends up being a 1:1, but if you had your stops down here, you're no longer looking at 1:1, you're looking at possibly 0.8:1, which is still fine. There's nothing wrong with that. That's 80% gain on a single trade that you're doing. Okay, so this is one scenario, right? Now, in the beginning, I mentioned about something about a problem that everyone does. If you did not look at this straightforward and saying, my 4 hours says buyer's territory, I do this like a buy, you come into a problem when you look at this. I'm going to put this back. When you look at this based on the 4 hour and 60, where are we? Here we are. Move this to the same spot too. There we are. You're looking at it like, yeah, but it's in a downtrend. What's going to happen is, even if you look at it based on the 60, because this is what happens to most people. They'll do their research based on the 4 hour 60, but looking at some kind of aggression and stuff like this here, they will come to a conclusion of, you know what, it's not going to go for a buy because it can't. Because look at the 4 hour is in a downtrend. This thing's going to go down. Watch. And the thing is, it does go down later, doesn't it? But the problem is, if we're focusing on a down from the 4 hours, then you must read the market only on the 4 hours and not the 60, right? If I eliminate the 60 completely and I read it on the 4 hours, then this information goes missing. This was the first move up. Here's an aggressive second move up. I don't see any kind of a slowdown, so why should I activate any sells right now? It's too amateur. It's too soon, which means let the next move go up. Still aggressive, but no higher high. Is that my V formation? No, it got rejected. That's not it either. Then the next move goes up, no higher high again. Now that's a good sign because it looks choppy. Followed by a lopsided V formation. Now we're talking. This looks a lot better, right? That's a 4 hour style trading. That's basically a daily 4 hour, right? Overall downtrend, and then here's a pullback coming in. You want to not mix up your knowledge because you know the direction, and even though you see the direction going your way, it can bite you in the butt saying that, watch out, man. Don't mix it up. You have to let the 60 do its play, finish its play, then it's the 4 hours turn because they're a lot slower. Okay, so like I said, if this is a problem that you've encountered, mention in the comments below that you've gone through the same thing before and you now know how to fix it, because I want to know how many others have this problem. I had this problem for the longest time. I still have this problem sometimes. If you're in the elite community, if you look at some of my recent Euro USD trades, 2 trades I picked up, both of them losses, and both of them went exactly how I predicted it. But it doesn't matter if it's a loss, right? So this is a situation because a higher time frame kicks in and you're sitting there scratching your head. You're like, I know better, and to not mess with my big boy. But understanding that your big boy is not going to mess with you anytime soon is in skill in itself. So you have to build on that skill and work on it. Okay. The simplistic approach is always put a wider stop loss. You should be fine no matter what. But as traders, you want to be better every single day and work on that rhythm so you can take this from part-time to full-time. Okay, so I hope these examples were useful and you understand the little the pinballs that happen towards the end in the test phase, and that pinball or that range is critical to see how a landmines will react accordingly to that area. Okay, so keep those things in mind, and I will see you guys next week for an idea of working with spikes. How do I know in my last pinball stage if I'm going to get a fake spike coming out of it, or is the market actually changing directions? So we're going to be discussing that next week. Hope this was useful. I'll see you guys soon. Cheers. Okay, welcome back. Welcome back. Okay, so do you remember last week when I was talking to you guys about Euro USD? If you don't recall it, it was in the this is what now you know why ranges happen. It was last week in that video. However, just to refresh your memory, we were looking at this up movement that was very strong that ended up going slower on the way up finally with the strong V formation, and we were talking about this final pinball stage, right, or the test phase. So in this market, when we went down to the 15, we looked at this like, yeah, I can see that's the area, but look how violent it is. It is a range, but look at how violent that area is, just banging away up and down, up and down, up and down. And I talked about it with you guys is, well, how do we know ahead of time that something like this can happen, right? So let's take a look at a similar pair first. Okay, let me open up Euro Yen. Euro Yen, let me go on to the 1 hour. It's also from the Euro group. And this is that same similar spot right here. It was a up move, followed by a down move, followed by a struggling up move, no higher high, and then a aggressive V or a lopsided V formation. And this one, their aggression was only this big, the pinball move, right? Let me go into the 15 to show you. Okay. Look at that little range in there. It's not so violent. And if it is violent, it's more towards the downside, but less towards the upside. Okay, it's got that little range in there, and then it, comes down collapsing after that. So let's discuss this. Why does this happen, and how can we know ahead of time? Now, the reason why one of these things keeps fighting it, and it has to do a lot with correlation, and it has to do with another of the topics that I've discussed before, talking about keeping track of the wind behind you. So stuff like this, I've already set it up for you prior to doing this recording, so we don't waste much time lining everything up. I went into the Euro group, right? Went into the 1 hour like we were looking at. Here's the Euro USD that you saw. It's going up, pulling back, going up, pulling back, going up, pulling back, slowly goes up, V formation, and here comes that violent test phase, right? Very aggressive, very just bang, 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 up and down all over the place. So we're looking at this right there to right there, okay? Now, it's coming in from a predominantly up move. Not to mention, it also has a ledge that it's bouncing off of as SNR. Okay, what about Euro CAD, that same spot? If I put my mouse in that same area right there, it's also in a predominantly upward flow and holding at SNR. Let's take a look at this on Euro Yen, holding SNR area. However, this can be argued as well, is that a down or is that an up? Okay, this is why this one has less traction. You have less volatility. Okay, wow, this thing doesn't write so well here, but you get it. Yeah, less, there you go. So it's less volatile here because it's trying to shift directions ahead of time prior to your test. Okay, Euro Swiss franc, if I put my mouse in the same area, we're all the way up here. Higher high sequences, we got a support resistance just below us. We're trying to fight. Okay, going down is not going to be so easy. Euro Aussie, same spot. If I put my mouse around here, it's also followed by an uptrend, and you're sitting at support resistance. For people are looking at this as a buy. They're not looking at it as a sell. Okay, so there's money flowing in for the buy side. Euro New Zealand, if I put my mouse in that same area, we look at this market as a downtrend or a sideways market. So this market won't help us at all to understand, well, is it going to be straightforward or not? Same with Euro Pound. This is that same area here for your test phase, but it's hard to say if that's in a top of the range or if that's from the bottom of the range. Okay, so even this one is out. But then if you look at their majority, right? if you look at the majority, like 5 of them are clearly saying you're in a sort of like an upward market. That upward market is what's causing all the problems, all the situations, right? Like your Euro USD wants to go down, but the entire Euro group is fighting it for a buy side. And that's why you're coming into this conflict. So now you have to think risk control ahead of time, right? Like let's say you did all your homework and everything and you're like, my Euro USD looks great for a sell. Now, as great as it looks for a sell, knowing this information ahead of time, you might be able to plan much smarter. Now, what I mean by plan much smarter is, let me show you this. Oh, sorry, Euro USD, not Euro. Okay. What I mean by plan much smarter is if you are aware that prices can fight and be aggressive, but yet every pair in the Euro group is showing signs of trying to turn around, but they have SNR fighting it, you can try to think and plan that let me try my best to get prices as high as possible. Okay? Not during the first move, not during the first test, but at least during the second test. I need the first test to tell me I am unable to go up. So never on the first test, but at least on the second test. Come on, give me the price as high as you can because I know you're trying to push up. That can actually give you an advantage and risk control both at the same time. Okay, so that can work for you in your favor. Okay, so I hope this is making sense to you of how you need to look at the wind. Take a look at this. This may look like here choppy up move followed by a strong V formation. Wow, look at that aggression there, right? Shall we look at that area too? Let's have a look. This is Euro group. This was slightly earlier. Let's just have a look. Let me just clean up this whole thing so you're not confused. Oops. Okay. Here we go. Clean, clean, clean. Okay, so Euro USD, this was slightly before. Where is it? It's up here. Let's move Euro CAD up in that area too. Where are we? Right here. Look at this. It's sitting above SNR. The V formation that this thing did on this area here, if I put my mouse just in that area, you can see it's that part right there. Look at that V formation. That's not a V formation at all. That's a struggling down move, which means buying pressure still available, which means stand by on this one. But let's make sure the entire group talks like that. Let's take a look at this further down too. Let's bring it down to that same area. Okay, where are we? We got... We are right here actually. The V formation. And this one looks like... Hey, this one's trying to go up. That's completely not showing any signs of correlation. So that's completely out. We can't rely on that one for a heads up. Okay? It's just simple point and click. It looks like it's a lot of work, but it's actually not. You just got to put your mouse on top of it and be like, okay, show me things that line up. And so I can just get a little bit of like a heads up. Here, no sign of a V formation. In fact, it looks like the V formation is going the other way. That's not good. Okay, so not reliable as well. Okay, Euro Aussie. Okay, where is our line? Sorry, it's further back, I believe. Yeah, there we go. It's further back. Here we are. All right, so this one's giving me a V formation here. So Euro Aussie looks exactly like Euro USD, and this is saying we got a V formation and it's lopsided. This one's saying I agree with you. We're gonna be going in for a sell soon. Okay, just taking it very simplistically, like just for the V formation. We're not reading the markets up leading up to it. Just very simplistic approach of, yeah, even looking at this, like, oh, well, overall downtrend, it should be even better. Put this together with Euro New Zealand. Let's take a look at the same thing. Sorry, it's further back. Further back. Where are we? Here we are. Okay, this thing is saying clearly a V formation. Okay, so this thing agrees. I'm gonna put a check mark on this as well. Okay, and Euro Pound. Let's do the same thing. Let me move the markets back, and here we are, right here. Okay. a V formation, but holding up here. And we don't even know if that's a V formation because there's a gap here, which means that looks like a stronger buyer, and this is just a pullback to SNR. Okay, so another problematic area. Now, can we say the majority is supporting us? Definitely not. Okay, not to mention there's an X here, there's an X here, unknown, unknown, but this is okay, and this is okay. And this one is clearly in an uptrend with the V formation just at SNR. Okay, it's at a 100% V formation looking thing. So the only one that actually looks pretty good is Euro New Zealand. If you want to compare and contrast and say, oh, maybe I can trade Euro New Zealand instead. Okay, but however, the same situation happens. Even if you choose Euro New Zealand, how far back is it going to pull back? That's going to determine how many pairs are saying, you know what, let's go for a sell. But if everyone is fighting that idea of a sell, expect spikes. So normally when we say you have a V formation here, we say put your stop loss, since it's an equilibrium V formation, stop loss healthily above your V formation. Wouldn't that be very scary? Especially if you've entered somewhere here thinking that, oh yeah, looks like that test is holding. That's it. I'm going to enter and I'm going to put my stop loss up there and I'm good to go. The moment this thing comes up, we're scared. The moment this thing comes up, we're going to get even more scared. Like, I don't know if this is going down, and God forbid we might even change our analysis because we get so scared. Right? So these things can happen. But knowing this information ahead of time and preparing for it, what can happen is, wait a minute, I know price is going to fight, so let me do my very best to get price as high as possible to my V formation, not the first test, but the second one. I want to grab it as high as I can, and even if I put my stop losses healthily above that one, it's still okay. I have a wider range of risk to reward, but I've also limited my risk of how much more negative can the trade go to scare me out of the trade. Okay, so I hope this is useful for you guys. I don't want to scare you from correlation because correlation is a lot of work, but I just showed you live in this recording, and this recording was what, 11 minutes long, 12 minutes long? It doesn't take much time. All you got to do is line up the things, take that extra 2 minutes and do the little work that it requires you to do, and walk away with a little bit more peace of mind. Okay, so let me know if you're already using it in the comments below, if you're already using correlation as your heads up, or let me know that you're going to start using it from here on out because you want to turn pro now. So use it the best as you can, use it to your advantage. Let's look at some more examples. Okay, so before I actually continue to the next example, I wanted to show you one more thing. Now, again, this is quite advanced and I don't want heads to explode, but I do know you guys are at the level to pick this up. So I'm going to try to explain it very, very slowly. And I want you to follow along best as you can. I know you guys will pick it up. And it's just, I just need to work on how I'm explaining it. If it doesn't make sense to you guys, please ask in the comments below. This is a little bit more advanced, but it's going to give you a sense of idea of how you can turn this information into a piece of opportunity. Okay, so just like we were discussing earlier about this area on Euro USD, right? I think this area is going to be volatile, right? Now this area is going to be volatile, but at the same time we know that the entire Euro group was trying to push north. That's the reason why we know it's going to be volatile. But if you're a person not trading the 60, but rather you're a person trading, let's say, a 15.5, okay? You're trading the 15.5 and you realize that, oh, you're in some kind of a range and you can trade the ranges, right? You're playing the range game here on the 15.5. If you are able to look at the big picture, not just the big picture of, let me see what the 1 hour is doing, but the bigger picture of, not only am I going to check what my 1 hour is doing to get an idea of where my range is going to end up, but even going as far as correlation and saying all the buys on this are going to be aggressive, all the sells on this are going to be aggressive, which means every time I try to do a range trade on the 15 minutes, I need to monitor carefully for any kind of spikes that are going to come out of it. Okay, so let me go into, let's say, the 5 minutes to show you the fine print of this of this thing because you're working on a 15.5. Yeah, this is only for some certain types of people who are trading ranges. This range can also happen on a 60 and a 4 hours, but then you're checking the daily to get an idea of what the range is going to do, and you're also checking the correlation of the daily, and you're checking what, is it going to fight aggressively. Then you have a better understanding of your range instead of just looking at this in four corners. You have a huge understanding of how can I really benefit from this, because now you have more information to support you. So let's take a quick look at this on the 5 minutes. Yeah, let me go back into that area. As you see the markets are coming down, notice this V formation test is supposed to be the thing that goes boom to the top. Why doesn't it go? Because now you're in this phase of highly aggressive movements. Okay, highly aggressive movements. Now here's another one. We got a V formation this way, but look at the V on the way down, look at the V on the way up. It's lopsided, but it's still fighting. Okay, cannot buy it right now. Here we can, because it fights it and it doesn't do anything on that red bar. It tries to go down again and it doesn't do anything. Okay, we can buy it there, and these trades will go very fast, very aggressively. Okay, same thing as the markets go up, they try to slow down in this area. This is very difficult to spot that if it's going to slow down, but you are able to get some other opportunities. Like this one, you only have one opportunity for a buy, two opportunities for a buy. You're gonna have to activate it here, unfortunately. Cannot activate it here, and if you do, you're gonna get a stop loss, but at least now you know why you're getting a stop loss, because you're in between an aggressive battle. So this is why I'm saying it's a little bit more advanced, but this is gonna help you with your post analysis. If you ever see a V formation that has a test and you're like, everything looks perfect, we should be going for a long, but I don't know why I got hit. Now you'll know. Now you will know. Okay? So you'll have a better understanding. And if you can play this game very, very well, you're able to even use the final sellers in this move. Okay? If you can pull out the final sellers in here, support and resistance right there. Final sellers who failed. Okay? Anyone selling from here, right? As support resistance bounces off that area, they're trying to sell it. No one made money, it bounced up and they lost the money. These are the guys you want to look at an area to exploit. Okay, so as prices are coming into this area, you start getting more and more aggressive with it, saying I think it's preparing for a buy. Okay, and I know why it's trying to go down a little bit lower further. Okay, so some things to keep in mind of. If you can pick it up, great. If not, it's also okay. Like I said, it's a little bit more advanced. We're still going to be going some more examples of the the more simplistic and holistic approach to it. But if you do want to push the bar, then now you have one more piece of information that should interest you and make you curious to saying, okay, now I know how to think. Let's see how far I can take my research. Okay, and then you go in and you test in all these things, because now you're no longer just, well, Naveen said do this, so I should do this. I want you to start thinking for yourself too now. It's just like, I've already learned how to do this, but I know what more I can do and I can accomplish, which means you now go into research mode automatically, because you know what to look for and you know what each pattern, how to pull out more opportunities out of it. It's just a matter of documenting it and seeing what it means for you and if you're good at it. Okay, so keep steady. Let's go on to the next example. Okay, so welcome back. In this example, we're using pound USD, right? We're going to use a completely different pair, and also we're going to be talking a completely different time frame. So we're looking at a daily 4-hour time frame. Daily, you look at your direction, obviously. Direction says overall down, and followed by, we're looking at a 4-hour to do a pullback, and then we can take it from there. So I'm looking at this as, here's your pullback, aggressive, then pauses a bit, does the next move up, okay, less than the previous movement, but it also instantly collapses on him. Okay, now when we see this stuff, or whether we say it's an equal V formation or it's a lopsided V formation, we need to start thinking ahead of time of, well, I can prepare according to my V formation design that if it's lopsided, then my stop loss being just above is okay. That's a simplistic approach. The more aggressive approach is, well, if it is equal, then obviously my V formation a little bit more healthier than just above my recent high. Sorry, not too high. But now, going into the nitty gritty of doing it with the roadmap here, where it's like, okay, well, what if we can find out how much, right? So that was the whole topic of this week. What if we can figure out? Then we are able to play around with our risk management a little bit better. Okay, so let's take a look at this. We're gonna do the same thing. I'm gonna open up the pound group. Okay, is this the pound group? Yeah, that's the pound group. Open up the pound group. Same area here, right? See, after that V formation, the test area here is the 4 hours. I've already pulled it up for you, lined it all up so you guys can see it. This same area here, if I put the line down like that so you guys have an idea. If I go to the same area on now pound CAD, just one over, you can see that this one does not say sell. In fact, it's still in a buyer momentum, right? Strong buyers, and this is not any kind of a V formation or anything. So that's not helping. Okay, pound yen. Similar area, put my mouse there. We're in this area here. That's saying buyer momentum. No signs of selling momentum. That's not helping. Okay, pound Swiss franc. Go back into that area here. Oh, this is that same spot here. Buyer momentum again. That's not helping to say it's a sell. Okay, look at the same area on pound Aussie. Okay, where do we have our V formation? Is around this area. We just dealt with what looks like a powerful landmine that was created going upwards. Okay, still in an overall downward movement, so it's like, I don't like it. It's maybe. It's maybe. But I prefer not to like it. Like, my maybes are generally no. I don't. Okay, this symbol is becoming just completely wrong now. let me just mark it like this. Okay, so like I don't like this one, right? If it's a maybe, get rid of it. Okay, pound New Zealand, same area here. If we're looking at it, we'll line it up to that red line, saying after the V formation, we're up here. We're in buyer's market, buyer's territory here as well. That's not helping. And then finally, euro pound. Notice pound is opposite. So if we're trying to sell pound USD, we have to buy euro pound. This is not saying buy, it's saying the opposite also. This is saying sell. So that's not helping also. You notice how most of the pairs are saying no to this? This is the reason why you have your struggle or your fight of your test going up as high as it does, almost challenging the tip of your V formation with a possibility to even do a spike sometimes. That happens. That happens. But now you know why a deep test can come in. Okay? Why a deep test can come in. And to know why a range happens, as we discussed this previously, let's open it up. Let's look at this test area and see where the range is sitting. And let me open it up on the 1 hour. Okay, here we are. Oh, sorry. Here we are. And let's put lines around it. Okay, there's the bottom of the range. And here is the top of the range. Okay, if I can even straighten it up, I can put it up right around here. There we go. Bottom of the range, top of the range. Okay, bouncing in these areas. But notice first test here and aggressively falls, right? So that is already a sign that, hey, we should prepare to sell it. Look at the second test. Goes higher than the first test. And then it goes down. But it's like, well, what if I quickly got in selling right here thinking it's not going to go up anymore and put my stop loss just above that? What do you think is going to happen? We're going to be killed, right? So that's the thing I want you guys to start noticing is when you start to feel the wind. Okay, when you start to feel the wind of correlation, and prior to taking your trade, just after you do your V formation anyways, you want to just do a little bit of background check and be like, is the big boys or the pound god okay with it? Or the US dollar god okay with it? You know, like, you just want to make sure you don't want to upset them. So you just go and check that out and you say, okay, looks like I'm in the clear, or I am not in the clear, which means I need to watch it much more carefully, and I am not interested in selling it around these prices. I am more interested in selling it around the prices where the last buyer got killed, which means in this uptrend, everyone tries to buy, right? But they try to buy more as it comes up, breaks through, and pulls back at support equals resistance kind of area, and he cannot make it. So this kind of area that now becomes interesting to us, because that area is where a lot of money has been taken from them, right? So we want to do all of our activations up in this area, not strictly. We're not going to just put our stop losses just beyond it. No, we still want to enter this high, but we also want to give it some grace as well with our stop loss, okay? But now you have a better risk management. You know how to control your risk better. You open up your opportunity a little bit better because you no longer are entering at prices like this, and then you're exiting down here. So your opportunity gets better by doing this. Your risk gets controlled by doing this, and most importantly, your psychology is safe. Now, why do I say that? What happens when you enter somewhere in here and then the prices keep going against you? Yeah, one time, okay, but 2, 3, 4, 5 times against you, and then 5 to 7 hours pass by in the negative. Yeah, you're gonna panic. You're gonna panic and maybe make the wrong move, right? But if your entry is somewhere up in this area and prices barely go into the negative and they come back and stuff like that, and even if it takes 7 hours, but you're still a little bit positive, you won't really mind. You know, worst comes worst, you move your stop loss to 0 and you get break even. But that's a lot healthier way of trading than it is entering down here and then saying, my sell is going to survive, and it will, but sitting through all this gray hair creation is not so good. Okay, so let me know if this made sense. And I think you guys will find this very, very useful, and you guys should start applying this to your trading to do a final check always. Okay, so I'll see you guys next week. Cheers. Okay, so welcome back. So as I discussed in the last video, that what we're going to be doing in this video is I'm going to be teaching you signs of the big boys, stuff like lifting, holding, I'm going to use different words that they use in the market because I don't want you to get confused by the words bids and offers and stuff like that. I'm going to keep it simplistic so you understand, because it's the concept that you need to understand, not the terminology. Terminology never made anyone anything except a angry conversationalist at a dinner table and looking down on people. So forget the vocabulary. Let's get to the point of what am I trying to say. Okay, that's the key. Okay, and that's exactly what we're trying to do with the market. Not trying to label it, but in fact we're trying to understand what's the market trying to say. Okay, so keep these things in mind. All right, so we're looking at New Zealand Japanese yen. Time frame does not matter. Okay, so leave the time frame out of it. Okay, I'm gonna even take you down. Let's say we're gonna switch it up. We're gonna take you all the way down to the 15 minutes. Okay, so you're looking at a chart right here. Multiple points of the market. It's moving. And as you're looking at this, you develop a plan. Let me switch the time frame so it's easier for you to. Let me switch currency. Let me see if I can take it to Euro USD or something. Okay, this is a design a lot of you guys can relate to. A seller's market, a nice pullback, blah blah blah. So let's take a look at a scenario that you might be used to. Something like this. Sellers are coming in. Here's the pullback, etc., etc., etc. Okay, the traditional design. Okay, now you do your research and you're saying that, okay, the markets are gonna be going for a sell. Okay, because it's in the seller's territory. This is seller's area. That's the guy who started it. Give me a pullback. Show me some buyers to come in. Once the buyers come in, the logic is now active because people are turning into buyers. As they turn into buyers, I need to see, etc., etc., etc. Okay, now, what we're doing with trade management is we're trying to figure out the rhythm of the market. Okay, so up until now, you've trained with everything that teaches you how to label the market. Okay, I've tried to make it into a shortcut. Now, some of you guys might think already the shortcut is difficult. Wait till you get into this area. It becomes even more difficult because now we can't just label anything as what we like to do in life. We actually have to understand what it's trying to say, as if we do not speak the language, but we're trying to understand what it's trying to tell us. That's the key. That's the key. You want to pick up on these things. Okay, so here we go. Buyers start to come in. Look at the way the buyers come in. Okay, let's start with the nitty gritty. Aggressive movement starts from here. Let me move this out of the way for you guys. Okay, and let me make this a little bit bigger so you guys can see it. Okay. Buyers start to come in very aggressively here. Gets all the way up to this guy and halts. Okay, gets all the way up to that guy and halts. Now, we are aware that this is a seller area. Okay, we're keeping it simple right now. Just focus on what I'm trying to say. Okay, we're aware that this is where our strong seller came from. So we try to expect, well, maybe a seller is going to come again. Seller comes again, and he isn't able to perform much. Okay, if he isn't able to perform much, well, here it needs to be the buyers again, because remember these big buyers? Okay, here comes the buyers again. Buyer doesn't do anything. In fact, he gets knocked back down, back to the same price where sellers are not letting them through. The next buyer once again. 2 attempts. Buyer is not getting anywhere. Now it's starting to tell you there's something up with this sell area. There's something up with the sell area. Okay, there's few scenarios that happens. Okay, so in a buyer's market, you know why you have a higher high, higher low, higher high, higher low, higher high, higher low? Okay, people just keep labeling stuff. Oh, that's a higher high, higher low, so it must be an uptrend. But do you even know what that means? What is a higher high, higher low? Okay, so let's go into the detail of that. A higher high, higher low sequence, something like this, it means whoever started this buy, think about it. He's buying at this price. This is the price he likes. But he buys again at this price. Why is he buying at a much higher price now? Can you tell me what that means emotionally? Yeah, if you're saying desperate, that's good. That's a sign of desperation. That's a sign for us that tells us, hey, none of us can move the market. Only person who can move the market is the big boy. And if the big boy is desperate, that's a sign for us to follow him. Okay, he's desperate, which means he knows something we do not know. Okay, keep that in mind. So he's showing signs of desperation. He is what this is called is lifting the offer. Okay, we're gonna forget the words. He's lifting, and he's holding at a higher price. So not only are you just trying to understand that prices are starting to buy again from in this area, but you're also starting to understand based on your knowledge that it used to be here, and now he's willing to pay a little bit of a higher price. All this needs to come to you quick. Okay? It will come automatically quickly. Initially, it's going to take some time trying to understand and get the idea of what's going on. Okay? So let's go back to this area and let's discuss this in detail. Okay? So there's a strong buyer here. He goes up aggressively and he comes to a halt point. Okay? Which makes sense. That's a seller's area. We're expecting a halt point. Okay. Now, trade management is understanding these levels, these zones, and everything. Okay? Remember those days back in the day when you used to chase the market? Yeah, I hope you're not doing it now, because you're going to be in trouble by me if you're still chasing the market. Okay, so yeah, no student at Urban Forex is supposed to chase the market. None of them. You'll be in big trouble by me personally. Do not chase the market. But doing this style of trade management lets you know ahead of time is, okay, the prices are going up, and then the seller smacks it down, but he doesn't do much. So do I buy it now? Obviously, I cannot buy it up there because I am aware that this is a seller's area. Okay, that's poor trade management. If I buy it up there, I need it to go higher. And what about my stop loss? What, below this guy? You see? You see how poor that entry becomes? So you want to be aware of these things and be like, okay, I can't buy up there. I want to buy as close as I can to the price he likes. So we're going to study this zone right here, and we're going to see how the markets get smacked down in that area. So let's go down to the 5-minute chart. Where are we? Here we are. Okay, so coming from this zone, we're one time frame lower now. We had a strong buyer going up. He gets hit, okay? He gets smacked down by this seller here, okay? And he smacks it down pretty aggressively, but large tails and everything coming in. So we're like, okay. And then the buyer comes right back up. Does he perform? No. He just barely makes a higher high and instantly crashes back down, which means he didn't make any higher highs. Buyer tries again, and then he crashes back down. Now, this could be a sign of, oh wait, is he stepping up? This was his buying price, and he's buying again here. Is he stepping up? Is that desperation? Oh yeah, that's desperation, for sure. But you're doing the desperation at prices where the sellers love that price. The sellers love that price, which means for them, this is their cookie jar to sell. Right? This is their point that they love to sell. They're like, oh, thank you. We want to sell here. So we obviously cannot give in to this desperation and buy right up here. It's too dangerous. It's too dangerous, even though we see the telltale signs. Now, the next thing. As we see the markets move down aggressively, now we're aware that, okay, finally prices get knocked down. Okay? Finally prices get knocked down. They start coming down. And we're now starting to approach an SNR area or the last time the buyers bought it. Okay, these are the two areas. The whole zone is important to us. Okay, this is the guy who started it. And that's your SNR area where the breach happened. These are all important areas. Prices come down to here. Around this area, they start to react. Buyer comes in hard. Okay, that's a little bit weird. Okay, so the next SNR is here. Well, if this is a strong seller, is he going to step down and become desperate? Oh yeah, he became desperate. He hit the sell. The sell went, he went. How far did the sell go? Is that a lower low? Barely. What happened to the next one? The buyers came back immediately. Now, when you put all this information together, can you feel the power of this big boy stepping up and saying, no, I will take it. I will take this price. Now, here's where trade management comes in. You felt the rhythm, and you're like, I can see that I cannot buy blindly just at the first time this thing touches down. I want to see that this seller is losing steam, but at the same time, my buyer is now willing to pay a much more expensive price to keep buying. Okay, otherwise this can turn into a range, right? This can come down lower and then the buyer can buy at a lower price. For him, it's a good thing. But our buyer is showing signs of desperation. Okay, so we're keeping track of these things. Sellers come down aggressively. You might, I can see a lot of people like confused right now. So you're gonna have to watch this a couple of times. We're gonna do more examples, don't worry. Just watch it a couple times, take it slowly, and try to, whenever you're done with all this, open up your own charts and try to see if you can talk through the rhythm. Talk through the rhythm. The reason why you have to talk through the rhythm verbally, don't do it mentally. Stop doing stuff in your mind. Do it, say it outright. Don't be shy. Don't be afraid of what the world thinks about you. Don't be afraid of what the next person at the coffee shop is thinking. Say it out loud. Let your brain learn faster that way, because you need to ingrain this in your mind as much as possible, because you have to do this fast. Okay? So, now, sellers are coming in, stops here. Okay? And then the buyers kick in. Okay, buyers kick in. Are the sellers going to step back down and saying, I will take it for a lower price? That's fine. That means the sellers are desperate. Okay, they take it for a lower price, but what do? Look at that red candle. What do? Nothing. They barely make a lower low, and immediately as they make a lower low, our big boy says, I love that price. And they take it all the way up to here. They take it all the way up to there. Now, that tells you our big boy is now desperate, okay? Because remember, who wins? The bigger player always wins, right? You got to keep that in mind. So if you assume that this is a seller's market and then we need a pullback to come in to do the sell, then you can think, okay, looks like the big boy is going to start to come in now to do the buys to take the price much higher. Okay, now when it comes to trade management, can you, when the price gets up, okay, when this happens and the price gets up to here, you're like, yes, my big boy is desperate. Can you just hit a buy right here? Remember, where is your problematic area? You can't just assume it's going to go to the next level now. You still have problems in the same area that the price kept getting knocked down, knocked down, knocked down. Who knows, this area might hold again. You want to get away from that as much as possible. This now, you're going to go into trade management and be like, okay, how low can I go? Can I get closer to this SNR? Okay, so now you're fighting for the best price. You now are no longer trading like a retail trader and just hitting buttons because you feel like it. You are now in the game of, come on, man, give me a lower price. Come on, man, lower price. No, 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 I don't want that. Get rid of that. Give me a lower price. You're going to give it to me? Otherwise, we don't do business. You are now on the auction floor, naming your price and saying, I want this price, otherwise, screw you. I don't want to play with you if you don't give me my price. You are now turning into a businessman, businesswoman. That is the essence of trading. Okay? With this trade management style, you're getting closer to the understanding of better prices, better entries, safer exits, and you're trying to gauge all that as much as you can, while at the same time monitoring the heartbeat of the market and saying, is my earlier big boy stepping in? Is my temporary big boy who was selling it, is he stepping away? What's going on? You're feeling the pulse. Okay, what else does that mean? Take a look at this. Look at the speed of the movements here. Look at the speed of the movements here. Would you say there's some larger involvement in here? Oh yeah. There's a lot more involvement in there, right? There's some big players starting to get active. Okay? So all of these things will start to speak to you slowly. It'll speak to you. Once it starts to speak to you, you want to build this as instinct or as second nature. Okay? That's when you start to really feel the rhythm of the market and you're like, okay, I see what's going on. All right. So now, let's move on to, actually, let's just keep going. I know it's a little bit long, this video. I like to cut them up in pieces, but let's keep going. I want to take you to the next stage, okay? Let's say this market now jumps up. You don't get an entry price in case you're thinking of a buy, because you're thinking, I want to do the sell. I'm thinking big picture. Okay, but you see the buyers are desperate because of all this stuff. We're like, good, let them be desperate, let the world become a buyer, because I'm looking at the big picture, and the big picture says sell, baby, because that's seller's territory, that's the guy who started it, you know the whole story, right? Now, buyers coming up very aggressively, you be aware of that. He's powerful, he's strong. You're aware that this is the price he liked recently. You're aware that this is the breaches he's made recently, which is SNR. Okay, you're watching every SNR level as much as you can. Then price gets up to here and it starts getting smacked down. It's like, why up here? Okay, maybe SNR from here. Okay, doesn't matter. But price is starting to get smacked down. Oh, sorry. Prices are starting to get smacked down. Okay, something here happens here. Prices get smacked down. Buyer holds. Buyer keeps going, gets smacked down again. Buyer holds. Notice how the buyer keeps holding this price. Desperation? Possibly. But does that desperation have any power? It's not really doing much. But he's holding prices up there. Now, a hold is a sign of desperation, which means we better get long with this guy. But if his buys are not performing, do we know why it's not performing? Yes, because you're in what we call a money spot, right? You're fighting a big seller. So obviously we don't want to buy up here, even though he's holding. We're like, I know you're desperate, but I'm sorry, that's not how I do business. I'm not taking prices up there. No way, Okay? Buyers go up again, makes a higher high. We're like, oh, is that a higher high? Looks like he got up there, but he got smacked down. Next candle, instantly back down. It's as if no high, no high, no high, no high. Sellers come down, buyers again hold. Look at that candle with that tail on the bottom. They hold again, but they do nothing. Sellers come back down aggressively, come back down to this price, and we're like, okay, this is his holding price, he's holding price, he's holding price. Now, we're coming to the next step of the lesson, which is he was holding, okay? Which means he likes a price, he's holding. 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 Everything points to this guy is desperate because his holds are much higher than his previous hold. Correct? Now, if he's holding, what does this mean? When you have a probe like that, because the market drops but instantly goes up, what does that mean? It means he was desperate, he was holding the price, but he said, let me see if I can get a discount, and he comes back and he holds it higher. If you're so desperate, why did you test the market? If you really want a car so badly, okay, if you want whatever you want in your life, let's say, think of any product in your mind. So some people might be thinking Lamborghinis, Ferrari, some people might be thinking, handbags, shoes, whatever it might be. Think about it. If you want it so badly, the prices have risen and it's $1,000 more expensive, and you're like, okay, I'm gonna buy it, I'm gonna buy it, and then you're like, let me see if it comes down to 900. And then as it comes down to 900, okay, that means the desperation is lower. This is a sign that the desperation is lower. Any guy who's desperate does not play chicken with the market. He does not see, let me see if I can get a better price. Desperate people don't do that, which means the desperation is now lower. Okay? Telltale sign of a big boy. Okay? Let me clean this up a little bit. So now we have a probe showing us desperation is a bit lower. Okay? Although probes are a sign that, hey, somebody wants to buy. Yeah, that is a sign somebody wants to buy. But the feeling, the psychological part of it means they're not too inclined to buy too much. Okay? So now buyers go up again. We are aware of all these areas that the sellers keep getting smacked at. Okay? Same thing here. Probe here. If it's a seller, why isn't our seller desperate? Why is he testing to see, well, can I get a higher price? And then he's holding again lower. That means he's not desperate either. Okay? Now, as the buyers come up, they start challenging back up into this area, and you start to see, okay, that's a big green bar that went up. Extreme buyers, possibly. A red bar still got knocked down. A green bar attempted, never got higher. Okay? Can you now look at this area and saying, well, could that be a sell? Is that a possibility for a sell? Now let's understand this in directions of trade management. If you do not know it's a sell right here, but you do know it's a sell after the fact this red candle starts jumping at you, can you do a sell from here now? Or is that now a dangerous area where the buys hit it from? Or you're close to an SNR area where the buyers might hit it. Look at this. This green candle is not just there for no reason. It got popped. It got popped, which means if your entry is here, you might even get a spike sometimes that can kill you. You have to be careful. Just because it looks like it's going doesn't mean you jump in. You play the business game. You negotiate. You negotiate. That is the true essence of trade management. Okay, you want to negotiate, you want to keep your plan in mind. So the bigger player, okay, who's looking at the big picture, okay, all of you guys who are looking at the big picture saying, I want to bloody sell this thing. You are now looking at this as, okay, I know this area. I see some signs where the buyers are struggling. Look at that. He's not going up full speed, no higher high, struggling a couple of times to go up there, and we see some signs of sellers smacking it again. Okay? But if I sell it from here, can I take it all the way down to my recent low? No. Okay, we have to be aware of this SNR area and this SNR area. This is the guy who started it. So we're aware of point 1 and point 2, which means you cannot just sell hoping that this is the spot to exit. You sell using your trade management skills now and saying, okay, plan 1, if prices come to here and they turn around, what am I going to do? Okay, so plan 1's going to be, if price comes to here, maybe I'll remove 50% of my profits, move my stop loss to 0, and if it gets smacked out, so be it. I made some money. Plan B is, if it comes to here, I'm going to move my stop loss to 0, move my take profits to, take 50% of my profits, and then I'm going to take my profits in this area. Okay, he never jumped back up. He came down here first before going back up. Okay, you made more money. And then your original plan of, let me get down all the way to the recent low, because once you have a pullback, you got to go to the recent low. That one comes a lot later after all this stuff happening, which might psychologically make you say, get out of the trade, or something wrong is going to happen. Okay, and you might end up with a smaller win. Okay, or even a loss. Or even a loss. What if the market turns around and starts going higher? Right? That's a possibility. Look how strong this buyers came in. Okay? So you got to keep all these things in mind. So trade management is basically trying to find the rhythm of the market. You're trying to understand the flow of the big boys. What kind of desperation are they doing? Are they holding? Okay, and then once the prices are up in this area, they're holding. Your whole point is, are they going to drop? Are they going to drop? And if they drop, do you sell right there? Do you sell the moment they drop the hold? Okay, they're holding, they dropped it. That means big money is no longer holding at that support. They dropped it. Now that's like a little breakout trade. You need to figure out if that breakout trade is safe. Okay, which means more work needs to be done at a faster speed. You can't just hit the sell because it's a breakout. Makes sense? I hope that's making sense right now. Which means the safest place for you is still to sell where you have good prices with the other sellers. Where the bigger players are interested in selling. Okay? And then if you're wrong, okay, your risk is very nominal. You're okay with that. And if you're right, your risk is 2R, 3R at the same time in profit making, if not more. Okay, so let's take this even further. Okay, I want to finish this entire example. Let's take this even further. Okay, so all of this is happening, and you're watching these areas. And you're like, oh, I can see it might be a sell, but I'm not sure. And then this red bar comes in, and you're like, ah, crap. This red bar came in, but I cannot sell it here. Okay, if the price gets up to here, I'll sell it, but I cannot sell it down here. And then it runs away. And then it runs away. And then it runs away. And you're like, damn it, I missed it. Okay, these are exclamation marks. Okay, damn it, I missed it. You feel horrible. But when you go back out to the 15 minutes, okay, you go back out to the 15 minutes, where is it? You're like, okay, well, we haven't even technically had a proper V formation yet. We just got one. Okay, it's like the buyer, you know, the rubber band man running up, coming down, running up, full rest. Okay, we got this thing down, and then we're getting, you know, some kind of a V formation, like whether you look at it like this. Here we go. Whether you look at it like either this whole thing like that, or you look at it like, okay, this piece here as a V formation. Thing is, you want to get prices as close to the seller side as much as you want. Okay? So either it's lopsided or not, but in my case, I don't see this as a lopsided, I see this as trouble. Right? If you know this from the V formation lessons, this is trouble. Okay? This is not a good sign. This is trouble. This means something got rejected here. Okay. Anyways, back to the 5 minutes. We're aware now that prices can come up anyways. It's okay. It's okay. Let it go. It's fine. Let it run away. Here we are. So prices ran away. Oop. Prices ran away. Gets down to this point, and the same buyer, okay, who we thought was stepping up, let go. He dropped the stepping up process, but he's still willing to buy it at this price. Now, what is his signs of how is he buying it? Look at this. So he's buying it, but look at the prices. How is it getting down so low? Why is he not desperate anymore? He's willing to take it at those prices. He's not so desperate anymore. Okay, let's see how strong he comes up. Okay, desperation can come in two ways. The strength of the movement, or if he's stepping up, which means he's willing to pay a higher price. He's not willing to pay a higher price. In fact, he's paying slightly lower price. That's a weird thing for us. Okay, just keep that in mind. Just keep that in mind. He comes up hard, and we are aware. We're going to take this step by step. Take it step by step. He hits it hard. He takes it up. He takes it up, and we are aware that in this area, we had some strong sellers, right? We had some strong sellers, whether you want to use it as supply and demand, or this is the SNR, and that's the guy who started. That's how I normally look at it, okay? I look at these areas like that. Buyers come up very, very hard, get rejected. Okay. Buyers come up again, get rejected. The sellers don't do much. Buyers come up again. Wick on top. Where's my seller? Seller's not doing anything. Buyers come up again. Okay, well, I know we have another area up here. We got an SNR area here. Well, he didn't do much. And then we got this area up here. All of these areas where the sellers keep smacking it down. Okay. Now, you have the moment when you see, when this gets up to here and it smacks it down like that, you're like, should I sell it here, or would I have been better off selling it up here? Okay, think about it. How many of you will say, I would have the feeling that I need to sell it from there? Notice that means you're selling right when the green candles are just coming your way, coming your way, coming your way. Who sells like that? Only people who are aware of the rhythm leading up to it, seeing these kind of things, saying like, what was this? Why is my buyer struggling? Why are there so many candles now versus last time? What's going on? Why is my seller so aggressive on the way down and my buyer is not so aggressive on the way up? Okay, it started off aggressive. The first piece was aggressive. Okay, we'll give him that. Not the next piece. The next piece is the same size of the first one, but it's split up into 1, 2, 3, 4 candles. Why the delay? Why the slowdown? Where's my buyer? Where's his desperation? What's he trying to do? Okay? So that's when you say, okay, now I can take the risk and saying, I'm going to go for it. I'm going to hit the cells with my stop losses just above. Okay, with my stop losses just above. But am I going for this area here? No. Now I do trade management. Here's my sell. I'm aware that the higher time frame, okay, you need your higher time frame instantly available to you, which means you're aware what's happening in the big picture. Like, okay, we got a few movements up. We got a big V formation, we got a fake looking V formation, and we got a test coming up. Could this be it? Maybe. Now, if it's a maybe, your sell that you're doing here, you need a plan. Doesn't mean the sell's not going to work. It just means you need a plan. What's the plan? Okay, option 1. I hit the sells from here. My stop loss is just above here. And I'm aware the second set was weak, but the first push was very strong. Okay, this area creeps me out. And this buyer who started it creeps me out. Okay, which means, if I can get in an entry as close to the sellers as possible, and that's my stop loss, that looks like a 2R to me. Okay, that looks like a 2R to me. I can squeeze in a 2R right there. Okay, here's my plan though. Step number 1, I'm going to get in, and as soon as price gets to here, I'm going to remove 50% of my money, and I'm going to move my stop loss to 0 because it can jump back right at me, and I don't want that. I don't like that at all. Now, that's a risk you're willing to take that way, saying, that's my plan, plan A. Plan B is I'm going to do the same thing, and I'm going to let it keep running, and I'm going to remove the next part over here. Plan C is going to be, okay, well, thinking that how weak it's got, maybe he can get down to the previous prices that he liked to buy from. Maybe he was going to buy it from there again. I don't know. Okay? But I didn't like the way this V formation was. So we got those plans. Okay, now all your plans that you have are profit-based. What about a plan that is loss-based? What happens if you hit the sell and the trade doesn't go your way? At what point can the trade turn around? Okay, you thought of it only in the ways you can make money, but what about if you can't make money? What if you enter the sell here? Where can you get a problem where it jumps back in your face? So we have a couple of areas. We have an SNR here, right? And we have this probe area here where prices were holding last time. Okay, which means if you see this red candle come in and you're like, oh, good, I'm making money, but then you see immediately the next candle becomes green and it closes right up here as if this drop never happened. That's an alert. Your brain is prepared for this situation. You're like, close this trade. I am out. Otherwise, next candle will be green again. And you're like, okay, it's a seller's area. And the next candle is going to be even bigger green. And that's a stop loss. But you will never see it coming if you're not prepared for it ahead of time. Use your levels, use your areas, gauge the understanding of what do I do in every possible scenario. You do that before you hit the trigger. Okay? Those of you guys who are really, really strict, write all the stuff down on a piece of paper and do it religiously. Do not get hijacked. Do not interfere with that trade if you just feel like interfering with it. Okay? Do not touch your trade just because you feel like it. Because feeling is the worst way to make money. Okay? You need a plan. Okay? Does that make sense? All right. So, keeping that in mind, now, all of this stuff happens. So you have trade number 1, okay? Which happens to be luckily good for you. Okay? Because you weren't sure if it was going to work, but it worked. You did your homework, you did your research, you read the market rhythm, you felt the areas, you looked at signs of the big boys. They're not holding anymore. They're dropping the markets. Why is the seller dropping it? Is this seller right here, why isn't he getting desperate? Okay, because this seller, he did hit it, but he didn't go anywhere. Sellers are not desperate. What's going on? You're keeping track of all these pieces of information. Trade 1. You make it out alive. You make some money, you keep some money in your pocket. That trade is now done. It is not profit. It is now account balance. Don't give it back to the market. That is your account balance. Don't look at it as that's my profit. It's finished. That is now yours to keep and yours to protect. Okay, not yours to say, well, since I made $100, next trade I'll try to make more money, because if I lose $100, it's okay. I don't lose anything today. No, losers think like that. Do not think like that. If it goes $100 into your pocket, that's $100 is gone. Think about it like it's gone, like you've spent the money and it's gone to your account. Now you're starting from zero again. Treat every trade as if it's a standalone. Okay? So, now, prices come back down to here very, very aggressively. And you're like, whoa, my buyer who was holding, he just dropped. He looks like he's dropped. He's come down lower, okay, then he's got back up, and he's holding in up here. Like, what the? So he dropped, sorry, he was holding, dropped the price to see if he can get a better price, and then he's holding up again a higher price. What does that mean again? Do you guys remember? It means he is not interested in the buy as much. He is going to buy, but it doesn't mean his buy is going to be as powerful. because he's willing to see if he can get a better price, which means he is not desperate at all. Okay? Our sellers, on the other hand, are playing a whole different game. You can actually see them getting slightly desperate each time. Okay? That's how channels are formed and downtrends are formed. Okay? You can see it. See? So as the prices get back up, now you can go back to your 15. Do you have it available to you? Can you guys see the bigger picture in here or no? Because that needs to be instantly available. Do you see the big picture? What just happened? If you don't see it, just step back into the 15 or have a side-by-side view if you want. Oh, sorry. Let's move on out. Where is it? Here we go. Ah, looks like now we have a legit V formation looking thing, right? Whether we count that as a V formation or we count that as a lopsided V formation, this one here, or aggressive V formation. Now we got the V. Okay, now we know things will try to aim for their recent lows, right? So let's go back to the 5. Sorry. Whoa. Sorry. I'm out of control today. Okay, here we go. We're back in the 5-minute charts. So we got this V formation here, and we are now watching for all the signs of what the buyers are doing, all the signs of every area, where they started, where's the SNRs, possible halt areas, and we're like, let's watch and see what they do. Okay, so we're aware this is buyer zone, buyer's area. They hit it. Okay, they hit it. Green candle comes up, and the next candle's instantly red. Oh my God, looks like the buyers are done. That looks like a V formation. Can I sell there? No, cannot. Bad trade management. Bad trade management. That's too risky. You really need to know that the buyers are going to quit there. We don't have that information that the buyers officially have quit. Okay, we don't have that information. We don't have access to volumes and seeing, are they really removing their prices? Are they really, no longer willing to buy this anymore, even though it's at a good discounted rate? Okay, so we're trying to feel the rhythm here. Look at each time he bought it. Very aggressive, very aggressive. Slower. He was buying it slower. Okay. He buys it a little bit aggressive here. Okay, interesting. Gets up, gets up, gets up. Gets to this area. Okay. Smacks down a little bit. Interesting. Here's our SNR for the buyer. Here's the guy who started it. Okay. Okay. Desperate. He steps up a little bit. Buyers move up again. Oh, interesting. As he gets up to this SNR area, where sellers now smack it. Okay, sellers now smack it, but we're aware of this zone right here. We're like, okay, well, if they smack it, I know my buyer is desperate. Maybe he's going to hit it again. Nothing, nothing. He hits it. Nothing happens. Oh, still in that same area. Okay, we don't want to sell right here because that looks like a V formation there. We don't want to sell that. Because it's still at the area where the buyers hit it up. We're like, come on, give me a price as high as you can. And I would wish to sell it from these guys if I can. Okay? Give me a price as high as you can. You start your negotiation process. Come on. Come on. Oh! Maybe you don't get that price and you're like, okay, I got this price here. After fighting a little bit, you got that price down there. And you're like, okay, I got this price. Now, scenarios. How can I make money from this? How can I lose from this? Okay? Okay, so you do the whole big picture, 15-minute chart instantly in your brain. You're like, okay, I remember there was 2 moves up. There was a V formation, lopsided V formation. And if it's a lopsided V formation, this is the underside of the SNR. Because in an aggressive V formation, we test to the underside of the nearest SNR. Could that be it? Maybe. Maybe. You got to keep this in mind instantly. Okay? Could that be it? Possibly. Okay? So, scenario number 1. If I'm going to do the sell and the sell works, obviously I'm going to have the absolute premium price. Scenario number 2. Okay? So, scenario number 1, you have the premium price. You're going to sell all the way down to the bottom. Our normal way of doing things, right? Take it down to the recent low. Scenario number 2. What if it goes into profit but not all the way? Okay, where can it stop? What if it's the same area? Okay, once price gets down to there, I'm going to have my finger on the exit in case it jumps back at me and I want to get out of this position. But so far, I am seeing signs that the buyers here suck. Last time the buyers were here, they're very aggressive. Okay, look, buyers were here, they stepped up very aggressively. No step up, there's no higher high, higher low. Sorry, there's no higher low here. So they're taking the equal price again, the same price again. Why? No desperation. Okay, so they bought it, but look at the way they're buying it. No desperation. Okay, all these signs tell you your sell is clear. You see all this information that we have to process in our brain? That is trade management. It sounds very difficult, but trust me, any of you guys who are saying, oh my god, I can't do this, I'm going to ask you one question. Do you drive? If the answer is yes, then you can do this. This is a lot easier than driving, because when you drive, how do you know at what point you need to move the steering wheel, hit the clutch, or hit the accelerator, look to the left, look in the rear view mirror? How do you get all these processes in your brain to make sure you move the car 1 inch? This is the same thing. All you have to do is just jump in there, force yourself to do this, and your brain will pick it up. Even though your mind might say, oh, this is difficult, your body and your brain will pick it up if you're thrown into it. Because that's how smart our brains are. It will pick it up. Okay? Alright, so now all this stuff is there, and you're like, okay, so we have two scenarios. Scenario 1, where we make full money. Scenario 2, if it starts hovering around this area and we make a little bit of money. Scenario 3, how can it hurt us? Okay, so if we have an entry here, our stop loss needs to be up here. Somewhere around here. Okay, what we're gonna do is, because I got a bad price, I won't be able to move my stop loss to 0, which means now I'm at a risk, which means at this point over here, I'm going to remove 50% of my profits, and I'm going to keep my stop loss where it is. Okay, which means I don't lose anything. It's like a break even. Okay, it's like a break even. So that's another way of trading. You don't always have to move your stop loss to 0. You can play the game of you remove some profit and still give the market room to breathe. Okay, as we go further, you're like, oh, it's going up. It's going up. Am I going to hit my stop loss? Oh, no, I'm okay. He's going down aggressively. Okay, remove 50% profits. Okay, remove 50% profits. What are we going to do? Stop loss 0? Okay, stop loss 0 now. Looking at the way how aggressive it is. Okay. That's one of the scenarios. If you're going for the other scenario where you remove 50% in case it comes back at you and turns around and goes for a buy, then you leave your stop loss where it is. It's okay. So 50% profit so far from your position. You're like, uh-oh, maybe it's going to come back up. He held. The buyer held again. Didn't do anything. This is not a place to sell from, guys. All of you people who think that's a good area to sell from, that is not a good sell indication. Yes, he's showing everything that says he cannot make it anymore, but please try to avoid selling from a buyer's area like that. It's not safe, it's dangerous. Okay, you made 50% of profit, comes down to your next SNR area, and you're like, okay, I can make my next level of profits in your next SNR area there. Okay, so this video has gone on way beyond what I was trying to explain. I hope this is like a webinar where only I am speaking. Okay, I hope this is very useful to you. Now you have an understanding how I use trade management myself, how important trade management is to me to understand every nooks and turns of the market, how I understand the rhythm of each candle, how they're processing. But it's not just looking here, but it's always looking here to compare to this, to compare to that. We're doing all this kind of stuff in our brain to make sure we make the best decision possible. Okay? We're looking at stuff that, are they getting desperate? Desperation is a higher high sign. Higher low sign. We're looking at, why did he test the markets? If he was holding at this price, why did he hold a little bit lower? Okay? Why is he teasing the market to see if he can get a better price? He's not so desperate. He doesn't want it. Okay? While on the other hand, we're seeing desperation from the sellers come in. Now, they want this thing badly. Okay? So all these signs, you need to put them together and you have a solid foundation of trade management. And as these skills get better, your trading skills would get better. Okay, back in the day, they used to do something called tape reading. Okay, tape reading is basically doing this, but looking at how much volume at what price is coming in. Okay, just because there's a high volume at a certain price doesn't mean that price is important. Okay, we don't know what that price means. It just means that price is now a reference point. So let's say the price is at $100, right? Just an example. At $100, $5 million was injected into the market. Okay, let's say back in the day, that's a lot of money, right? $5 million were injected at the price 100.00. Okay, that's a point of reference to you. So the price then goes to 90, then it goes up to 100, and it holds. Another 10 million comes in. Okay, price then goes down to let's say 95, then it goes up again to 100. And then you see another 10 million come in, let's say. This now tells you they're holding this price. That's a hold. But then if you suddenly see price go up to 105, it goes to 105, but then instantly it drops back down to 100, and then there's again 10 million at the price of 100. This is a sign that a probe just happened. Okay, prices went higher, then dropped instantly. A probe just happened, but you know that the sellers, the people who are trying to sell this thing are not, they're not so desperate with this. They're trying to see if they can still get a better price. Okay? If the market is good and the people who have the right information, okay, let's say you who's watching this right now, okay, let's say you are a big boy, and I'm a market maker. I'm, let's say, FXCM or Oanda or any of this stuff. So you're a big player, right? And you're like, okay, at the price 100, I'm gonna short $10 million. Okay, and every time it goes to price 100, I'm gonna keep selling at 10 million, 10 million, 10. You have a total of 100 billion, let's say, and you keep selling 10 million, 10 million, 10 million, 10 million, and you're saying, and I'm trying to say, like, wait a minute. He's not trying to show me he's trying to sell 10 billion. He's doing 10 million, but he's doing it very quietly. To me, that's a sign I pick up on that, hey, that big boy is selling. Me as a market maker, I have a lot of liquidity and cash too. I start selling also. Now, if I start selling also and you're selling also, and then other market makers look at you and they're like, oh my God, the big boy is actually selling, and they catch whiff of it, that's when the markets start to move, because there's not enough people buying anymore, and then there's desperation for all the sellers, all the market makers, like, I want to sell too, man. I want to sell too. I want to make this money. Does that make sense? So we got the chasers of the big boys. They don't lose money. They actually make money, but they don't make as much money as the big boy. And the big boy has information on how he needs to move the markets. Whether you call him a big boy or you call him a bank or economy, whatever it is, just think of him as one entity. It'll make it easier, make your life easier. Think of it as one person. The big boy is trying to do this, trying to do that. Okay, so let's move on to the next video.